Okay.
Okay. Can you see my screen?
Yes.
Yeah, awesome. So do you have any specific questions? So will you ask them along the way?
I will ask them along the way.
Okay, so I'll just show you what I do basically. Okay.
Yes.
All right. All right. So let's get started. So what I do first of all is that now most of the intraday traders, what they think is that the 1 hour, 4 hour, or the 15 minute, that's the most important chart for them. That's how they think, the intraday traders. But for me, the most important chart would be the weekly chart. Okay. The reason is that I do not care about any of these. Okay. So hello, can you hear me? Can you hear me?
Yes, I can hear you.
Okay, okay. So tell me if I'm not clear or something. Okay.
Okay.
Okay, okay. So what I do is I start with the weekly time frame. Okay. I'll mark I'll mark my market structure on the weekly time frame. Okay. So what
Okay.
I so now what I do is like I see this now: higher highs, higher lows, higher highs, higher lows, higher highs. It took out this high and then it came back down. Okay. So this is where we're at on the weekly time frame. Okay. And then now I have my range on the weekly time frame. So I hope you know what a range is, what a trading range is. Do you know that?
Uh, yes, I know it, but if you can explain it, it will be even better.
Yeah, sure. So do you know all of these smart money concepts? How long have you been using them?
I'm following smart money concepts from like January this year.
Okay, that's like
But
5 months. Okay,
but
that's
I'm
okay.
not
So
profitable.
perfect. That's okay. I'll tell you what to do. And do you know the basics, these order blocks
Yeah,
and
I
all
know
of
the
those
basics.
concepts?
Yes.
Yeah. Okay. Okay. So now what happens is now if we're in an uptrend, price will go like this. It'll create higher highs and higher lows. Okay, that's the basic. That's the basic
Yes.
market structure. And then it keeps breaking the higher highs. So once a break of structure happens, okay, a new range will be created from this low to this high. Okay, is it clear?
Yes.
Okay, so now I'm telling you this because the trading range will be very important when we move further. Okay.
Okay.
Okay, so now once a new range has been created, what I do is I'll mark the discount and premium prices. Okay, you see that?
Yes.
You can use a Fibonacci or something. So I hope you know what discount and premium
Yes.
prices
Yes.
are. Okay,
Yes.
and
Actually,
then
I do use them in my trade
yeah,
plan.
that's good. That's good. That's better. And then so since we're in an uptrend, which means the market is bullish, we have to wait for price to retrace back into a discount price before taking price back higher. Okay.
Yes.
So now price will come back down and then boom, it will go back up. Okay.
Yes.
And then the opposite for a bearish market. Okay. Price will come back
Yes.
up and it will break the previous lower low. Okay. And then a new range will be created from this high to this low. And then price will retrace back into a premium price and then come back down. Okay. That's the very basic.
Yes.
Now, do you know why higher highs? No. Do you know why price retraces back inside of this range?
To
Okay.
mitigate the previous orders.
Yeah, yeah, exactly. To mitigate previous
Previous,
orders and
if it
the
is in a bullish trend, it comes back to mitigate the previous sell orders.
yeah, sell orders. You're right. And then the most important thing is it comes back down inside the range to take all of the internal range liquidity. Okay, I hope you know what internal range liquidity is.
I
You can
know
tell me if
what
you don't know.
liquidity is, but
Yeah,
not
so
about the internal and external.
that's okay. That's okay. I'll tell that to you. So then now once price creates a new range like this, we have this break of structure right here. And then we have a new range from this low to this high. All right. And then everything inside of this range would be internal range liquidity. Okay. Like we can
Okay.
have now imagine this is a daily time frame. Okay. So
Okay.
within this real price swing, we may have something like this, right? On the lower time frame.
Yes.
Okay, so then
Hmm.
all of these lows would act as internal range liquidity because there will be stop losses or sell stops below this. Okay.
Okay.
Okay, and then now, so just I'll just give you the basic idea and let's dive deep into it once we move further. Okay, and now what price does is it comes back down to take out all the internal range liquidity, and then it goes back higher to take out the external range liquidity. Okay, the external range liquidity lies right here. Okay,
Okay. Yeah.
because yeah, the all trading ranges have internal range liquidity resting inside of them and external range liquidity resting outside of them. Okay, that's simple because anything within this range, anything inside of this range would be internal range liquidity. Okay,
Yeah.
and then anything outside of this range would be external range liquidity. Okay, I
Yes.
hope it's clear. I hope it's
Yes,
clear.
it's
You can
clear.
ask me if it's not clear. Okay,
Yeah.
cool. And then the opposite for bearish market. Okay, price will come back inside of this range to take out the internal range liquidity. Okay,
Yeah.
take
Yeah.
out
Okay.
the internal range liquidity. So what it does is it comes back higher to take out internal range liquidity plus to mitigate out of their negative positions, and then it will come back down. Okay,
Okay.
okay, so I hope it's clear
Yes,
now.
it's clear.
Okay, okay, so now on the weekly time frame, where are we right now? Okay, see, like I told you, we're intraday traders, right? So I hope we
Yes.
are only interested in intraday trading, day trading.
No,
Okay,
no,
so
I'm interested in swing as well.
swing as well. Okay, I'll tell
Yeah.
you how to swing with this. Okay, now
Okay.
I do not care about all of this because it'll take probably around 1 or 2 months to reach this. Not even that, at least 1 year. Okay, so what I do is, where are we currently on the weekly time frame? This is what we could see. Price went like this, created a higher high, came back down, higher highs, higher lows, higher highs, and then
So,
we have this. Yeah, what is it?
you consider a break with a wick as a break of structure?
Yeah, the reason for that is because now, even though it's a week on the weekly time frame, okay, this takes 7 daily candles, right, to form
Yes.
one weekly candle. There must be more than yeah, there must be 7 weekly daily
Yeah.
candles.
Five.
Five,
Five
five,
daily candle.
five, not seven,
Yeah.
5. So now, even though it's a week on the weekly time frame, we could see something, a candle closing below that on the daily or the 4 hour. You see that we have multiple
Yes.
candle closes, so which means it's a break of structure. Okay,
Okay.
I hope it's clear.
Yeah.
And then yeah, so now where are we on the weekly time frame? So price is in an uptrend. Okay, that's very clear. Price is in an uptrend, and then like I told you, we have this new range now from this low right here to this high right here. Okay, we have a new range. I hope it's clear
Yes. Yes.
because the price went higher highs, higher lows, and then higher highs. So I told you, once a break of structure happens like this, we have a new trading range from this low to this high. Okay, and then we look for discount and premium prices. Now, since we're in a bullish market, we want price to retrace back into a discount price before going higher. Okay, I hope it's clear.
Yes.
And then now you see how price came back in. Now on the weekly time frame, we're in a discounted price. Okay, we're
Yes.
in a deep discounted price. Now, like I told you, see, price came back inside of this to take out the internal range liquidity. Now, if you go to the daily time frame, this is what we could see. We had a break of structure, a new range. Okay, a break of structure, a new range. Then I told you, once a new range has been created, now imagine, now I can't use the replay tool, sorry, because my TradingView Premium expired yesterday. Okay, so now
Yeah.
we have this right here, from this low to this high. Okay, so I told you, why is price coming back inside of the range? Okay, like you told me, to mitigate out of their negative positions. That's right. And what's the next thing? To take
Internal
out
range
internal
liquidity.
range liquidity. Yeah. So now what is internal range liquidity within this current trading range? Okay, it's all of these lows, this low, and even order blocks and liquidity act as order blocks and FVG, so imbalances act as internal range liquidity. Okay,
Okay.
hope it's clear because
Can
they
you
have to come back
explain?
down. Yeah. What
Can you
is it?
explain more about fair value gap?
Okay, that's simple. A fair value gap is equal to an imbalance. That's it. You know what an imbalance is, right? So
Yes.
if you take three candles from this candle to this candle, you see
Yes.
now these
Yes.
candles has to meet each other. Okay, these candles have to
Yes.
meet each other, or else there is inefficient price action because for every buyer in the market there needs to be a seller. Okay, now if buyers increases, there needs to be sellers of the same amount. Okay, now you see this right here. Now right here only buy side was offered. You see the two big bullish candles, this and
Yes.
this. You see now sellers were inefficient in this market. So now imagine this right here. You see how price was inefficient, this from this low to this low and this low to this high. I'm sorry, this low. You see that?
Yes.
And then you see price came back down and then offered sellers right here, and then it went back up. That's simple. Okay, it's simple right now, but once we're gonna learn about entries and stuff, these imbalances will be very important. Okay, so
Okay.
I hope you know how to spot imbalances and stuff. That's very basic.
Yes.
Okay,
Yeah.
now how to spot imbalances? You see there's imbalances everywhere. Okay, there's imbalances everywhere. And then what I do is this. Now I have my weekly range marked from this low to this high. I told you, the price will come back inside of a range to take out internal range liquidity, and then go outside of the range to take out external range liquidity. That's the pattern, from internal range to external range. Okay.
Yes.
Okay, so now what we do is we enter at internal range liquidity and then exit at external range liquidity. Okay,
Okay.
and then now if you take price from right here, you see how price created this low. Okay, and then it created this high. Now imagine this did not happen. Okay, now imagine this did not happen. Now we have a break of structure right here. You see, that's a break of market structure. You agree with me? That's a break of market
Yes.
structure. Price came back down and then it went higher, breaking this
Yes.
structure. Okay, and now we have a new range from this low
Uh,
to this high.
I have one doubt.
Yeah, what's it?
Like, can I access the annotation too?
Yeah, sure.
Yes.
How
Yes.
can I
So
give you
like,
permission?
no, no, I have it already. Like,
Okay, awesome.
do you not consider this pullback as another like structure point?
This thing.
Yeah, this pullback.
No, all of this would be intermediate term structure. The reason is price has to, now this is what price must do. Okay, I'll draw that for you. Now imagine this is the weekly time frame.
Like, this is one of my biggest question. Like,
Yeah, I'll tell you how to figure that out.
yeah.
Okay, now imagine this is the weekly time frame. Okay, so
Okay.
now if you need to know market structure, okay, you need to know market structure very well in order to trade this way. Okay,
Yes.
now if this is the weekly time frame, this is what would happen on the 4 hour, right? All right, this is what would
Yes.
happen on the 4 hour.
Yes.
So now you need to know where the real momentum came into the market, which means now ask yourself, zoom it out, and then ask, where did the expansion really began? Because now you see this was just intermediate term structure within this range. You get that?
Okay. Yeah.
Okay, now you see that. Now this is what you're confused with. Now this is a new range, the real range from this low to this high. So you're considering all of these intermediate term structures. So now you're getting confused with this, right?
Yes.
So what you should do is zoom price out a little bit, and then look where the real momentum came into the market. Where is the real expansion from where did it take place? You see that?
Yeah.
Now, if you
Uh,
zoom it out, you see that? You see
yes.
that? Now that's like always choose the lowest low and the highest high as the swing points. Okay.
Okay.
And the thing is, every time frame has its own trading range. Okay. Now, even though
Yes.
this was a weekly trading range from this low to this high,
Yeah.
the 1 hour will have its own trading range. The 15-minute will have its own trading range, and even the 1 minute will have its own trading range. Okay.
Yes.
So the most important thing is you need to know market structure. Because if you know structure, you know what the trading range is. And if you know the trading range, then
Yeah.
that's it. You know where to target next and where to enter. Okay.
Yes. Yeah.
I hope it's clear. And then now you see, imagine this was where price from this low to this high. Okay. So you see, price came back down inside of it, and then, like you do, it mitigated from this order block right here. You see that?
Yes.
From that order block, and
So,
then yeah, what's it?
like I used to consider this whole candle as an order block, like
Which
this
one?
buy
Yeah,
candle.
that's right. This thing right here. That's the order
Yes.
block. Yeah, right. Because the cell started from here, and then
Yeah.
it came back down, and then
Yes.
it went back up, because the whole thing is the order block. Okay.
Yes.
I just refined it. And then now I told you from this low to this high is our new trading range. And then price came back up. Sorry, it came back down. Why did it come back down? To take out the internal range liquidity. Okay.
Yes.
Now, where would it go next? External
The
range
external.
liquidity. I told you from internal to external. There you see, boom,
Yes.
took out that high. And then I told you, while taking external range liquidity, a breakout structure happened right here. You see that? Right
Yes.
here, this is a breakout structure. This is a breakout structure plus a liquidity grab. Because why do I tell this is external range liquidity? Now, if price is in an uptrend, okay, if price is in an uptrend like this, now, so have you heard of these people called the breakout traders?
Yes.
Okay, the breakout traders. Now, what they would do is they will place their buy stops above all of the swing highs, above this high, above this high, and above this high. Okay,
Yes.
okay. I hope it's clear. So
Yeah.
why they do this is because now they know that price is in an uptrend. Okay, they know that price is in an uptrend. So once a higher high has been taken out, they know that price has to continue higher, because if this is being taken out, okay, if this is being taken out, price has to go back higher, right? Because
Yes.
we're in an uptrend. Okay, because we're in an
Yes.
uptrend. Now the banks know that. Okay, the banks or the market makers, so whoever you want to call it, okay, they know that. They know that. And then they do not want us to make profit. The reason is our stop losses are their profit. Okay, our stop loss is their profit. You
Okay.
understand that?
Yes.
Okay. So now, once the breakout traders does this, okay, once they place their buy stop above this high, okay, now the market makers or anyone, they know that. They know that. They know that there's a ton of liquidity resting above this high. They know that. Because why? They have this COD data and they have access to everything. They know what the retailers or the hedge funds, they know what they're doing. Okay. And like I told you, the banks, they do not want us to make money. Okay. So what they do is they will take price higher. They'll take price higher and then activate all of these buy stops. Okay. You know what a buy stop is, right?
Yes. A buy order
Yeah.
when a
So
certain limit is passed, certain price is passed.
yeah, well, yeah. So now they know that. Okay. So now
Okay.
what the banks do is they'll take price higher. Okay. And then all of the buy stops that were resting above this high now will get activated because price is now higher. Okay.
Yes.
So I told you, now they do not want us to make profit. Okay. So now what they do is, now if you bought here, your stop loss would be somewhere around here, right?
Yes.
So now what they do is they'll activate the buy stops and then boom, they'll come back down. Now these people would be in a loss. You see that?
Yes.
You see that? So that is why uh, this can be called as external range liquidity. Okay,
Yes.
I hope it's clear.
Yes,
So
it's clear.
you can tell me if it's not clear. Okay, you can tell me.
Hmm.
Then so I'll show you this. Vice versa on a bearish market. Okay, people would place sell stops below this low, because why? We're in a bearish market, and they know that if this lower low has been broken, price will go back lower. That's how the breakout traders would think. Okay,
Yes.
so now what the banks do is they'll take price back down lower and then activate all of these sell stops. Okay, so if you sold here, your stop loss would be somewhere around here, right?
Yes.
You know what they do is boom. Now these guys will also be in a loss. Okay, I hope it's clear.
Yeah. Yeah, it's clear.
Okay, so that is what happened right here. That is exactly what happened right here. You see,
Yeah.
went higher, activated all of these buy stops, and then boom, took, which means they took out external range liquidity from this high, and then now they're coming back inside, which means they activated all of the buy stops right here. And then if they keep going higher, the people who placed buy stops right here would be in profit, right? They would be
Yes.
in profit if price keeps going higher. So like I told you, they do not want us to make profit.
Uh,
So the thing is, so they'll activate all of the buy stops and then they'll take price down lower. You see that?
okay.
Now
Yes.
external range liquidity has been taken out and now they're coming back down for the internal range liquidity. Okay.
Like now I have a question.
Yeah,
So
what is
like
it?
on this I also above this I also the external
Yeah,
breakout
yeah,
traders
there
will
will
be
be.
placing their orders, right?
Yes, they would do that. But you see this, after every major high or low has been taken out, there needs to be a pullback. Okay, why? The reason
Yes.
for a pullback is, like I told you, there are traders who place buy stops on pretty much every high and low. They'll do that, buy stops and sell stops, because that's why we call them the dumb money. Okay, now
Okay.
even above this high, there would be buy stops. Okay,
Yes.
there would be buy stops, and then you see what price did. They activated it and then came back down. See that? You see that?
Yeah.
Because, and the thing is, they can't do that all the time, because now the people must have a reason to invest their money in this market, right? So they need to
Yes.
give them a chance to win at least once or
Yes.
twice. Because now if they keep doing that, people will think that this is a scam or something, and then they will not invest their money into this. So
Yes.
they,
Yes.
yeah, they know exactly what we're doing. So what they do is they'll just fool you. Okay, they'll fool you
Yeah.
all day, every day. Like they do that on a daily basis. Okay, they just fool
Okay.
you. Okay, and the thing is, everything has a 50% win rate. All of these retail strategies, it has a 50% win rate. Why? The reason is
Because they
because,
want to people to be
yeah,
keep motivated. Yeah.
yeah. So if it does not have any win rate, okay, people would not do that, right? People would not
Yes.
invest their money into this. So that is the reason they let you win sometimes, because and that is the reason why support and resistance works. Okay,
Yeah.
because they have to give you a reason to invest your money into the markets. And then now we know we're on a discounted price in the weekly time frame, and then we have this determined on the daily time frame. Okay, now I'll go back. This is what I do on the weekly and the daily. You see that? That's all.
Yeah.
Okay, and then I go to the 4 hour. Go to the 4 hour, and then now on the 4 hour is where I mark my liquidity. Okay, so now you see this. Even though this may look like relative equal lows, they aren't. Okay, this is not relative equal lows. Okay, price, what it did was, this low right here took out liquidity from all of the previous lows, even though it's not visible. I told you this is a 4 hour time frame. Okay, on the 15-minute we can see a clear wick coming back down and taking liquidity from both of these lows. Okay, from both of these lows. You see that?
Okay. Yeah.
You see that?
Yes.
Even by a tick, they did that. You see, they manipulated. These were equal lows right here and right here. And then this candle came out of nowhere and then took out liquidity from both of these lows. Okay, I hope
Yeah.
you can see that. And then,
Yes.
yeah, and then to do a manipulation, banks need to be involved, because the retailers, they can't do something like this, right? They cannot do something like this because they only risk around 500 to $1,000 or something. They can't move the market like this. So which means now this is presence of order flow. So do you know what order flow is?
Uh, yes, a little bit.
No,
If you
you
can
can
explain.
tell me if you do not know.
Yeah.
Yeah. So then what order flow means is this. Say we're in an uptrend. Okay. Now we have an order block right here. We have another one right here. And another one right here. You see now how price is mitigating out of their orders? You see that?
Yes. Yeah.
Comes back down, mitigates, breaks structure, and then comes back down. Once again, they mitigate, and then they goes back up, and then they'll come back down, mitigates, and then go back up. Okay, now this is order flow, which means can you see how the orders are flowing now? You see,
Yes.
from this low to
It is
this
a
low
bullish
to
order
this
flow.
low. Yeah, that's bullish order flow. And then vice versa in a bearish market. You see, comes
Yes.
back down, mitigates, comes back down, mitigates. So this is order flow, which means they're going from mitigation to mitigation. Okay, that's
Okay.
order flow. That's order flow. Now, on the 4 hour, we can see order flow right here. Okay, came back down, took out
Yeah.
liquidity from both of these lows, and then you see this order block right here that got mitigated. You
Your
see that?
voice is audio is pretty low. Like,
Now can you hear me?
yeah.
Sure. No.
If you can increase it a little bit more.
Okay, give me a minute. Give me.
Okay.
Okay, now can you hear me?
Yes, clearly.
Okay. And then, like I told you, we have this clear order block right here.
Yes.
Okay. And then what did price do? Went back up and then came back down. Mitigated, right? Now where is the
Yes.
order flow? Right here. Because now people can say this is a order block. Okay. People can say that this bearish candle is a order block. Okay. But
Okay.
really what happened was this. Price went higher. Okay. It went higher. And
Yes.
then look at this candle. Okay. Look at this candle. This is where this bearish candle closed right here.
Yes.
Okay. The bearish candle closed right here. And then this candle opened right here. Okay. It
Yes.
opened and then it dropped back down like this. Okay.
Yes.
They came back down to mitigate this. And then it went higher. You see? Now,
Yes.
the, the, the best thing about the wick is that it acts as imbalance and also as an order block. The wick. Okay. The wick acts as imbalance and also as an order block. Okay. Because why? There were sellers pushing it down from right here. Once it
Yes.
opened, sellers pushed it down. But what happened was, once it came back down here, buyers started pushing it higher. You see that? And then
Yes.
buyers took the upper hand. They pushed it back higher, which means now there is a lot of selling and buying pressure on this wick. Okay, you see that?
Yes. Yeah.
And then so now where is the money? Where is the money for real? Not this candle right here. Okay, money is now here on this wick, because now I told you why. You see that? Because
Yeah.
once it opened, it was a selling candle, and then later the buyer started pushing it back higher. Okay,
Yeah.
okay, which means now you know what an order block is, right? That's a sell to buy candle.
Yes.
That's a sell to buy candle. You see this order block? It came back
Yes.
down, took out liquidity from all of these lows, and then went back higher, which means now this is a bullish order block.
Yes.
Okay, this bearish candle is a bullish order block. So now the same thing happened right here on a lower time frame. Price came back down, sell to buy. You see that? Sell to buy.
Yes.
You see that? So now the money is on this wick. Their money is on this wick. I told you.
Yes.
Okay, I hope it's clear. You can ask me if it's not clear.
I do have a question.
Yeah, what's it?
Let me annotate it. It's like what
Okay.
happened is like this was a sell candle. Then they
Yeah.
started buying it,
Yeah.
and then they if we can we see like this then they again sold it right here, right? So like
So yeah, they sold it back again. But
yes,
on this single candle, what we can see is that buyers finally took charge of it, right? Because you see it closed, it has closed above the opening price. You
yes,
see that? Which means now it's a bullish candle.
yes,
Okay, price opened, and then now this is the story behind that wick.
yeah.
Okay.
I understood the story behind the wick and why you are saying that the money is sitting here. But like from the concepts I have learned, like when we are in a range like this, and
Okay.
the sell candle which breaks this range is where the most of the money is sitting.
Yeah, but who taught you that?
Hmm?
Who, like, where did you learn that from?
I learned this from Anjet, I think. Anjet.
NZ. Okay.
Yes.
But the thing is, okay. But the thing is, you see now where did the real bearish momentum came into the market on this week, right? So like,
Yes.
what is it right here? Nothing, nothing, because this is where the sellers originally pushed the market back down, right here.
Yes.
Once this candle opened, because now there's nothing above here. Okay, there's nothing. So there might be something because there needs to be something. So price came back down and then it mitigated something. But then why did
Yes.
this wick come back down here? If all the money is right here, why did this wick come right here? Because I told you the liquidity is in this wick. Okay, their money is
Yes.
in this wick. Okay, you see that? Because okay, now there might be orders right here. So that's why they came back down right here. But then ask yourself, why did it come back down right here? If the money was right here. You see that?
Yes.
Yeah. And then the next thing about a wick is, okay, the wick will always have an order block or an imbalance on the open of it and then on the 50%. Okay, on the open and then on the 50%. Because I'll show you some example. Let's see, let's look at this the same thing. Okay, now say we're looking at this or this thing. Say we're looking at this long wick. Okay,
Yeah.
now this is the 4-hour time frame. If we go back down to a 15-minute, this is what we could see. Um, oh, that's all I can do. That's okay. See that? I told you there will be an order block. First one will be on the open of the week, and the next one will be on the 50%. You see that?
Yeah.
Okay. I hope it's clear. First one will be on the base of the week, which means the open of the week, and then the second one will be on the 50% right here.
Actually, I didn't understood it this big concept. Like
Okay. Now this is how a week will be formed. Okay. Now say this is a bearish week or a bullish week. Okay. Price will come back down.
yeah.
Okay. And then it will go back higher. Okay.
Yes.
Go back higher. Now this, can you see that? Price even breaks this structure right here.
Yes.
Okay. Now this is a 4-hour week. Price opened, it came back down, and then it broke structure. Okay. It doesn't necessarily have to break structure, but I'm just showing you one single candle. Okay, price
Yeah.
came back down. Okay, sellers pushed it back down, and then the buyers took the upper hand, and then they pushed it back higher
Yeah.
from right here. So you have seen this, right?
Yes.
Now there wouldn't be just one single candle like this. Okay, there'll be multiple candles like this, like this. You've seen that, right? There'll be
Yes.
order blocks. There will be order blocks on a lower time frame. Now
Yes.
imagine this. Now imagine this was a 15-minute time frame. Okay, there'll be an order block right here. There'll be an order block right here. You have seen that, right?
Yes.
For sure, you would have seen that. So
Yes.
now
Yes.
I'm talking about just one single candle. This is a 4-hour wick from this
Okay.
high to this low. That's a 4-hour wick. Okay.
Yes.
So now on the wick, that's the same thing. Okay. So if it's a 4-hour wick on the 15-minute, there'll be multiple candles, right? There'll
Yes.
be multiple candles. So that's it. So don't overcomplicate it. That's just simple. That's simple. The first one will be okay. The first one will be on the 50%. Um, okay, now if you take this wick right here, like I told you see, the first one will be on the base of the wick right here, on the opening of the wick. Okay, because
Okay.
on a lower time frame, price went back up and then it came back down, which means first once this candle was opened, okay, once this candle was opened, buyers pushed it back higher, and then sellers pushed it back down lower, which means
Yes.
now there will be an order block right here, right? And
Yes.
then you see how price came into the base of that wick. You see that?
Yes.
Okay, and then the same thing here. You see how price came into that opening of the wick. You see that accuracy here? We
Yes.
don't have to go to a lower time frame to refine this. You see that? Came
Yes.
into the base of that wick. So if you can follow wicks, that's better. Yeah? Even right here, yeah? You see that? I told you. First one will be on the base of the wick. Yeah? You see? Came back down. This has been mitigated. So right here, the base, the first order block has been mitigated. So where is the next one? On the
In the middle.
50%.
Yeah.
Yeah. See that? See that?
Yes.
So
So are you trying to say that
that's
the
simple. Yeah,
are
what
you
is it?
trying to say that an order block will be mitigated twice?
So
First at the base
not
and then at
twice,
the
not
middle.
twice, not twice. Okay, I told you this order block. Okay, I'm sorry, this week
Yes.
this acts as imbalance plus order block. Okay, two in one.
Yes.
That's a two in one. This week acts as a two in one. Okay,
Yeah.
so there will always be two order blocks. Okay, two order blocks. One would be on the opening of the week, and then the other one would be on the 50%. So that's not one. That's not one order block. Okay, there'll be two. And I'm talking about the lower time frame. Okay, now this is the 4 hour. This is the 4 hour.
Yes.
So I'm telling you what happened on the lower time frames. Okay, I hope it's clear. That's very simple.
Yes.
Don't overcomplicate it. Okay, that's very simple. This is how we take it. The first one would be on the base of the wick, and second one would be right here. So even if this has been mitigated, even if the one that was lying on the base has been mitigated, we know that price can come back down into the 50%. Okay, now this is additional stuff, so I'm just telling you. Okay,
Hmm.
so you need to know these stuff. Okay, that's very basic. So have you
Actually,
watched
no,
ICT?
nobody ever told me about it like this.
Yeah. So have you watched ICT?
No, like I tried
So
watching
this is
ICT,
what
but
he
like
calls a
it was,
rejection block. That's too long, right?
yeah,
Nobody
it
watches
talks
it.
about a lot of
But
stuff which is
he is
not
the one
important.
who tells you.
Yeah. Can you
No,
like your
no, no, no. He
voice is
he
all
talks about
again?
most important stuff.
Uh,
Now, am I clear now?
yeah, now it is clear.
Okay.
So what were
Then
you saying about ICT?
yeah, so he does not talk about useless stuff. He is the one who really talks about
Yeah.
the useful stuff. The Senjet
Oh,
and everyone, they just copy all of their stuff and then rename their concepts. That's
yeah.
what they do. It's bullshit. Then if we go to the 4 hour, like I told you, now this week, this week was created by news. Okay, which means now even on the 15 minute, this would be just a week. Okay, but we know
Yes.
that there will still be money on the wick, even though it was created by news. Okay, and then okay, let's ignore that wick for now because that was created by news. And then I told you about, now I'm gonna tell you about this thing, this wick right here. Okay, so I
Hmm.
told you where will the first order block be?
On the
On the
opening, on the base.
opening. You see how
Yeah.
price this opening of this candle, it came back down and then mitigated. It mitigated this. Then
Like
where will the
in
next one
the
be? Yeah,
yeah,
what's it?
in the case of this cell candle, uh,
Yeah,
let
you
me
see?
annotate it. Like what must have
Okay.
happened is like it went like this, then it closed like this, right?
Yeah, yeah, yeah.
So this must be
It
our
sold and then it bought.
uh, this should be this whole cell candle should be our order block, right? In
Yeah,
that
now
case,
so there wouldn't be just one single candle, right? There wouldn't be one
yes,
single candle. There'll be like this,
yeah, there will be
one
multiple
like this.
candles.
Yeah, there'll be multiple
Yeah.
candles. So then, so right here, like this, I'll tell you. Now I'm talking about the week. This is what would have happened on the lower time frame.
Yeah.
Price sold back down like this, and then buyers started pushing it back up. Okay, that's what would have happened. You see that?
Yes.
This is what would have happened. Okay, so
Yes.
like I told you, this acts as an order block and as well as an imbalance. Okay, so now you see there'll be imbalance from this low to this something right here. Okay, and then we even have this order block right here. Okay,
Okay.
hope it's clear. It's very simple. It's very simple. You don't have to overcomplicate it because now say we have this and then this once again. Okay, like I told you, the
Yeah.
first one would be on the opening right here, and then the second one would be on the 50% right here.
Yeah.
Okay,
I got it. Yeah.
okay, awesome. And then right here, now what happened here was price came back down and then it pushed back high. So I told you, first one will be on the opening. You see, that has
Yes.
been mitigated by this candle, by this wick. Came back down, mitigated, and then went higher. So now we know where is the next one on the
In
50%.
the middle. Yes.
Yeah, see that? On the 50%. See how price came into it. Okay, you see that? You see how accurate. See, we didn't even want to go to a lower time frame to refine it. Just from the 4 hour, we got it. See, that's
Yes.
where exactly price came in. So that's what I did. Okay, I wanted to buy from here, but this happened with news. Okay, this happened with news. So you know, during news, spreads will widen up. Okay, spreads will widen up, so we cannot buy it from this low right here. Okay, so
Okay.
I
Okay.
bought it from here. Okay, and then so you know about liquidity, right? Where liquidity and you know about
Yes.
liquidity. Now the problem comes when you're going to choose an order block, right? Because there will be multiple order blocks all over the place, like all over the
Yes.
place. Okay. So now, how do we determine the right order block? Okay, the right order block.
Yeah. That is the
So
biggest
now
question.
this works every time. Yeah. Okay, I'll tell you. Now this works all the time. Okay, this works all the time. So now, before choosing an order block or a point of interest, okay, now if we're in a bullish market, it needs to rest in a discount price. Okay, and
Okay.
then okay, in a bearish market, it needs to be in a premium price. But what
Yes.
makes it high probable? Yeah, what makes it high probable is liquidity must be fed into our point of interest. Okay, liquidity must be fed into the point of interest, which means now if we are in an uptrend, okay, if we're in an uptrend, say this is what happened because price does not move that perfectly. So this is what it would do. Okay, we had a breakout structure right here. Okay, we had a breakout structure right here. And then I told you, I told you. Now, to determine the right order block, there needs to be liquidity fed into that point of interest, which means now, can you see these equal lows? Okay, can you see that?
Yes, I can see that.
Okay, so we have equal lows. So we know that equal lows will be taken out. That's basic smart money. You know that,
Yeah.
right?
Yes.
We do not buy from equal lows. So now, if you have an order block right here, would you trust it?
No.
No. Why?
Obviously, there are a lot of chances that the smart money, the institutions will take out this equal lows because
Yeah,
a lot
for
of
sure they'll do that.
stop losses are there.
Yeah. So now what we would do is we would determine something right here. Simple. Below it. Because now you know that this will be taken out. So that's it. So price will take out all of this liquidity and then tap into this. That is it. So it's not that hard. You see how liquidity has been fed into this POI right here. You
Yes.
see now there's stop losses. Now these stop losses have been fed into this POI, which means now once these stop losses have been taken out, price will, which means the market makers are now in profit because the retail traders or the breakout traders or anyone, the people who trade support and resistance, now they will place their stop losses right here, right?
Yes.
If they buy from this equal lows, their stop losses would be right here. Okay, so now where their stop losses are is where our entry point is. Okay, I hope it's clear.
You are not
So then
audible clearly. Okay.
now,
Now you are. Yes. Like it start when you were explaining this
okay,
something
I'm
like
sorry for that.
it stopped.
Yeah, there's some issue with the connection. Can you hear me now? Is it?
Yes. So can you explain from here again, like what you were explaining here?
Can you see?
Yes.
Yeah, sure, sure. So now, can you see how liquidity has been fed into this POI?
Yes.
Because now the people who trade support and resistance would view this as a support. Okay, and then
Yes.
people would even look at this as this M pattern. You see that?
Yes.
This M pattern line. All of those crazy stuff. Okay, and people now even the breakout traders would place their sell stops below this. So now you see how liquidity has been fed into this POI. We have
Yes.
all of these stop losses resting just above it, which means now you know that price will do this. It will take out all of these lows. Now what they do is to trap more and more people into this. They'll come back down and then they'll even give a reaction from this equal lows, which means now even more traders would jump in,
Yeah.
right? They'll give a huge
Yes.
reaction like this, and then comes this, the manipulation. The
Yes.
manipulation straight into our point of interest, and then boom, that's it. You see, there needs
Yes.
to be liquidity resting just above or below it. Now, in this case, there needs to be liquidity resting just above it. You see that?
Yes.
How
Yeah.
how liquidity is just chilling? It's just chilling above it. You see that?
Yes. This
Okay.
markup looks like one of the recent trade you took on GU.
GU. Yeah. I'll show you. So we'll go to the 1 minute time frame, and that's like magic. I'll show you everything on the 1 minute time frame because you can stack up orders every time. You would have seen my channel, right? Like I
Yes.
take
Yes.
orders
Yes.
out of everywhere. This
Yeah.
is what I do. This is basically what I do. That's all. Okay.
Okay.
I'll just show it to you because once we go into the chart examples, you understand it better, and you even have the recording so that you can watch it, rewatch it, and then once you back
Yeah.
test, you'll see what I'm talking about. Yeah. So and then on a lower time frame, I'm sorry, on a bearish market, this is what would happen. Price will come back down, and then you see it creates this little resistance right here, equal
Yes.
highs, equal
Yeah.
highs, and then it will come back down. So now, would you trust any of these order block? No, right? Because
No. Yeah.
what is the reason for you to trust this? There, I told you, if it's a high probable point of interest, there needs to be liquidity fed into it. Okay, there needs to be liquidity fed into that point of interest. Now, you see, there's nothing. No liquidity has been fed into this. No liquidity has been fed
Yes.
into this. But
Yes.
which one has liquidity resting below it? See that? This,
Yes.
because there's a ton of liquidity above this. This is a liquidity pool, and then people would even
It
do
is.
this.
Your
Yeah,
voice
what's it?
was stucking again. Like.
Ah, shit. There's some issue with the connection. So am I clear now?
Yes.
Okay, okay. I'm sorry for that. And then you can see this now. Just this little resistance being formed just below our POI. Okay.
Yes. Yeah.
So now we know what price will do
It
is
is stucking again.
what price will do is some problem with your connection or my connection?
Uh, I think my connection is working fine. Let me check. Okay. Can you give me a minute?
Okay. Yeah, yeah, sure.
I'll just check.
Okay.
I don't think it is a problem with my connection. Like I tried playing a 1080p video, so like it was playing without any buffering.
Yeah, yeah. So if it happens
Yeah, it is still
again,
stuck.
you
If
can
you are speaking
just
something,
tell
I
me,
cannot
okay?
hear. It is still happening.
Still? Okay, okay. Give me a
Yes.
minute. Okay. Can you hear me now?
Yes.
Okay. I'm sorry for this.
Like sometimes it happens that your voice completely goes out.
It goes out. Okay. So if it happens, just tell it to me. Okay. Tell it to
Yes.
me if it
Yes.
happens. Okay. Now, can you see how this resistance is being formed right here?
Yes.
Okay. Which means now this acts as a pool of liquidity because we have tons of top losses above this.
Yes.
Okay. So now we can expect this. We know that equal highs has to be taken out. Okay.
Yes.
So now the stop loss would be our entry. So price will do this. Now, what makes this high probable? What makes this point of interest high probable is the liquidity resting below it.
Yes.
Okay. Now, price will come back up and then boom. That's what they would do. Okay.
Yes.
Okay. Now,
Sometimes
yeah.
something like this might also happen that this is our order block, and like the
Okay.
price went with a very a lot of momentum, and it came like down here, and it created liquidity here.
Yeah.
It will
And
also
then even
be.
this, yeah, even this would make it high probable because now we have equal lows just below this.
Yes. Okay.
Okay. Okay.
Yes.
Now, so once it comes to liquidity, okay, once it comes to liquidity, not only double tops and double bottoms act as liquidity.
Yes.
Okay.
Yeah.
Now, what the retailers have been taught is this: if price comes back down and if it breaks structure, right, like this, and
Yes.
and if it retraces and then if it breaks structure once again, okay, if it does that, now retailers, okay, I'm talking about retailers, how they have been taught in their textbooks is that this low is a strong low because it broke structure, it retraced, and then it broke structure once again. Okay, so now
Yes.
retailers would view this as a strong low. You see that?
Yeah. But even we view it as a strong low now.
I don't. I don't.
Yeah, I
So I
also
have
do.
a lot of
I
reasons
learned
to.
it. I learned it in
I'll tell you
Phantom.
why. Phantom. Okay. Now they would view this as a strong low. And now what the breakout traders would do is once they find a strong low, okay, they'll place their sell stop below it. Okay.
Okay.
Okay, they'll place their sell stop below it because why? They think if now this is a strong low, and if it breaks, they'll think price has to continue going lower. That's how they would view it, right?
Yes.
Now we will have stop losses of the people that bought from this low. Okay, that would be around here. Okay,
Yes.
because now we are the ones who are trading intraday. Okay, we are the ones who are trading intraday, and only we trail our stop losses. Okay, like we take it higher and
Yes.
higher. Now that's what we would do. But most of the position traders or the swing traders, these hedge funds and stuff, what they do is they trade on the higher time frames because they have a lot of money to risk. They'll
Yes.
trade on the daily time frame or the 4 hour, and I don't think they'll go below the 4 hour time frame. Okay,
Okay.
now what they would do is once they find a strong low, they place their sell stops below it because now they would view this as a strong low, and they'll think if price breaks it, it will just keep continuing going lower. It will keep continue going lower. Okay,
Yeah.
that's how they would view it. And then, so do you know what an inducement means?
Yes, they taught it in Phantom. It basically acts as a place where people will enter the trade, so that
Yeah,
and the BFIs use it as a place where the orders are induced basically,
induced.
so
Yeah.
that they
So
can take the liquidity created by the
yeah, what
orders.
what an inducement actually means is like the market makers or the banks or anyone who controls these markets, they will induce people into doing something wrong. Okay, now you see
Yes.
this thing will be seen as a strong low because now the inducement is very very important because if you know where the inducement is, okay, if you can like once you look at the market, if you know where the inducement is, you can enter anywhere anytime. Okay, even on the 1 minute this happens, and even on the second time frame this happens because price is fractal. Okay,
Yes.
okay. Now we have this low. I'm talking about this low, this specific low. Okay, now breakout traders would view this as a strong low. Okay,
Yes.
and then they'll place their stop loss below it. Okay, and then they'll even have their sell stops below it because they think this is a strong low. Okay, they'll even have
Yes.
their sell stops below it, and then even smart money traders would get trapped. I don't think Phantom and the NZ they taught this. Even smart money traders would view this as an order block, right?
Yes. Yes.
And then now even you would look at it as an order block, right? Because you see
Yes.
it has everything. It has all the
Yes.
confirmations. Took out liquidity from all of these lows.
Yes.
Okay, and then it broke structure right here. Okay, it
Yes.
broke structure right here, and it even has a little bit of imbalance. You see, it even has some imbalance. So now we have all the good reasons to sorry, we have all good reasons to consider this as a strong low. Okay, we have all the reasons to consider this as a good order block, right?
Yes.
Because it took out liquidity and then it broke structure. It even has some imbalance left. Okay, but what's missing? The inducement. Where is the inducement? You see that
Uh,
there is no
like
inducement.
in
Liquidity has
Phantom
to
they
be fed
teach
into the POI. Yeah.
that this can be an inducement. Like this is
Okay.
liquidity,
That
trendline liquidity.
okay. But now there needs. That's it. I told you. Even Phantom will not teach you this. Imagine you saw this as an induced trend line liquidity. Okay, that's fine. That's trend line liquidity. Okay, that's trend line liquidity. But and then imagine how many traders would have looked at this like that. This is trend line liquidity, and it took out liquidity from these lows and it structure. So now smart money
Yes.
traders would view this as a good order block, right? So
Yes.
now imagine all of the new people to smart money because I would always wait for confirmation. Okay, I'll wait for evidence of
Yes.
reaccumulation or distribution. Okay, and then imagine how many people would have done this, the newbies to smart money. Imagine how many people would have done this. Okay,
Yes.
It's a very clear order block, right? And then
Yes.
see, because now these days there's a lot of smart money traders, not retail. They do, now most people do not use retail concepts. Okay, they use smart money. Well, now
Yes.
that's what they do. Now even in Jet, they make their own names. They'll call it a FU or something. They'll call it a full-bodied candle. They tell all
Yes.
of these like rebranded names, but the real thing is this is just an order block because ICT who was the one to come up with all of this. Okay, so this is just an order block.
Yes.
Okay, and then now imagine how many people would have looked at this that way. We have trend line liquidity. And then, okay, now smart money traders would view this as a good point of interest, right?
Yes.
They
I
have
also would
every
have viewed
reason.
it as a good point of interest.
Yeah. So then ask yourself if it was that clear, and if the
Yes.
market makers do not want us to make money, would they give it
Yes.
to you that easily? Would they do
No.
that? No, right?
Definitely
So
no.
now,
Yeah.
definitely no. So now imagine how much of liquidity would be resting below this low.
Yes.
Okay, imagine how much of liquidity is now resting below this low. Now, even the smart money traders have been trapped here. Okay, the
Yes.
reason is, yeah, the reason is this. They'll do this. The new people to smart money, they'll do this because that's just the 30 people stop loss. They'll think, okay, that's fine. And then now, even the breakout traders have been trapped here, right? Now they'll view this as a strong low. I gave you the reasons why. Okay,
Yes.
I gave you the reasons why. And then now what's missing? The real inducement. Okay. An inducement means now, okay, now this is trend line liquidity. That's right.
Yes.
But if people bought here or here or here or here, now would they place their stop loss below this? Is there any reason for them to do it? Like
No.
no, that
Yeah.
does not make sense. So now how can this act as liquidity? Even this even this was a trend line at that point. Now, how can
Yes.
it be liquidity? Now, the people who bought here would have taken their profits, right?
Yes.
After this break of stocks, they would have taken their profits. So, we need to have a real inducement. By an inducement, I mean a trap where even the smart money traders, the breakout traders, the position traders, the swing traders, the hedge funds, all of them have to get trapped. Okay, all of them. Now,
Yes.
you see how much of liquidity is lying below this low. Ask yourself how many people would have viewed this as a good order block, and how many
Yes.
people would have looked at this as a strong low. Okay, it's not only you and me that's trading. There's like millions of people that's trading, and
Yes.
nowadays because of this the COVID thing, many people are into trading, right?
Yes. Yes.
So now, so now people would now imagine how much of liquidity is resting below this low. How much of liquidity? Okay, and then now, like once a new trading range has been created, okay, we need to identify where the real trap is. Where is the real inducement? By inducement, I do not mean all of this trend line liquidity or equal lows or anything. The real inducement, the real trap, a trap where even the smart money traders would get trapped. Okay,
Okay.
and then now we have that, and we have this order block right here. Like now, what's special about this order block is that now liquidity has been fed into this POI. All of
Yes.
this liquidity has been fed into this POI. I hope it's clear.
Yes.
Okay. But now,
Yes.
okay. So does it make sense so far?
Yes.
Yeah.
It makes sense, but like then again, I'm getting confused in structure then.
Yeah. Structure plays a major role. Structure and
Because
liquidity.
here broke the structure here, right?
Well, yeah.
Yeah, but then so then it will be considered as a strong low. Then if we break this, then it will be a break of structure, right?
That is the inducement.
Yeah, that
That
is the
is the inducement.
inducement. Yes, I can
Yeah. See,
understand
you're
this,
you're getting
but
trapped now.
yeah,
You need to know market structure very well because
yes, that is the
on
problem.
on the daily time frame, like I told you,
Yeah.
this was the real price swing from this low to this side. I told you.
Yes.
Anything in between would be
Yes.
intermediate range liquidity.
I'm not able to hear you if you're speaking something.
Hello. Can you hear me?
Uh, yes. Now I can hear you.
There was some problem with my connection. I'm sorry for that.
Yeah. No problem.
Okay, okay, okay. So now you see, even you get trapped here. You will view this
Yes.
as a strong look. But
Yes.
I told you, this is a real price swing from this low to this high. And
Yes.
everything in between, okay, everything in between is internal range liquidity,
Yes.
right? Now you
Yes.
see, now you see, even you got induced into doing something wrong.
Yes.
You
Yeah,
see
but
that?
I
Now,
don't think I would have taken a trade here. Like,
yeah,
because
yeah,
for me, we were in a downtrend in the 4 hour.
yeah.
So yeah.
We
But
we
I
need
would
we
have,
need confirmation.
yeah.
I
We
I
but
wouldn't even look at this. I wouldn't even look at this order block because I know for sure this will be taken out. I know that because
yeah.
there was no inducement. Inducement is the main thing. Okay,
Yes.
because now there's a lot of smart money traders. So now look at the charts. Now go back to your charts in the years 2004, 5 or something, and then look at the market. There's just one order block. Price comes back to that, and then it goes. That's it. Now,
Yeah.
since there's a lot of smart money traders, they will create more and more traps. Okay, a trap
Yes.
where even the smart money traders would get trapped. Okay.
Yes. Yeah.
Now, what's special about this order block right here is the liquidity that's resting above it. Okay, now you see
Yes.
the stop losses and the sell stops and even the stop losses of the smart money traders, everything have been fed into this, right?
Yes.
Because now after the manipulation, where will price come into? Boom, right here, right? Okay. But
Yes.
now there's something else we need to consider. Okay, there's something else because after now, once you're going to choose an order block, always choose the order block that is closest to the inducement. Okay, that's closest to the inducement. Okay,
Okay. Yeah.
okay. And now, like I told you, people would place their sell stops below this, right? They'll do that,
Yes. Yes.
and then once price comes back down like this, okay, the
Yes.
people now if it keeps going lower, the people who place sell stop right here, they would be in profit. Okay, and now if
Yes.
they're trading on the 4 hour time frame, so obviously they have a lot of money to risk, right?
Yes.
So now look at this thing. So you need to look at all of these tiny details. Okay, now it may seem like a big thing, but once you start doing it, you can like once you look at the market, you'll see that. Okay, now you see if they place their sales stop below this, you see that's 33 pips until here.
Yes.
Okay, now
Yes.
if the sell stop get activated right here, and if it goes
Yes.
back down to 33 pips now, and since like I told you, they'll have a lot of money to risk. Okay, so
Yes.
now imagine they used a 10 standard lot size right here. So once it goes back down to 33 pips, that's like a $33,000 profit. You
Yes.
get that? So now,
Yes.
would the market makers let us make money? No,
No,
right?
definitely.
No,
Yes.
definitely no. So now,
Yes.
will it come back down this far? No, right? No,
No.
they will
Yes.
not. They will not. So I told you, always choose the POI that is closest to the inducement. Now, what do we have right here? You see this wick? You see this wick? What did I tell you about the wick? The first one would be on the opening of the wick. Okay, mitigated.
Yes.
Mitigated. What's left? What is left? 50%.
50%. Yes.
50%. You see how price came back down right here? You see how it came back down the 50%. So we would not, honestly, obviously, we will not take a buy from the 50%. We know because a huge manipulation is coming now because this is a liquidity pool. This is a pool of liquidity.
Yes.
Okay, we know that. Like I gave you all the reasons why we
Yes.
do not trust this low. You see that? And then You see, took out all of the, now it activated the sell stops, took out the stop losses of all of the smart money traders or anyone. And then now even the breakout traders have been trapped, the position traders, the swing traders, everyone is now manipulated. Everyone has been taken out now. Okay.
Yes.
Now, would they take price back down lower? No. If they do that, these people would be in profit. So now they need to go back higher. Okay.
Yes.
Okay. Okay. So now, but where will they go into? Where will they go into? Now, on the weekly, this was our range, right? From this low to this high. Okay.
Yes.
That was
Yes.
our range. But on the 4 hour, this is what we could see. Price went higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, and then a break of structure. A break of structure right here. You see that? We had a break of structure.
Yes.
Okay.
Yeah.
And then price broke the structure. And then now
So
we
I
yeah,
have
what's
a
it?
doubt. So if you
Okay.
consider VIX as a wick break as a break of structure, then here also it broke the structure, right?
Yeah, it broke
In the
structure. It broke
4 hour.
structure. It broke structure right here. Okay. But you see,
Yes.
external range liquidity has not been taken out yet.
Yes.
You see, I told you. Now, did this week go higher than this? Higher
No.
than this previous high? No, right? So
No.
then it comes back down, and then you see, even that's an inducement. That's an inducement. Now you would take this as a good POI, right? Because why? It took
Uh,
out liquidity and then it broke it even broke structure right here. You would
yes.
view this, yeah. That is the reason why we must always go with the higher time frame flow. Because if you do not know where the higher time frame is heading, or the intentions of the higher time frame, you're gonna fail. You're gonna fail big time. You see that? Price took out liquidity from this high. Okay, it took out liquidity from this high. And it even
Yes.
broke structure. Now, how many people would view this order block? You see, it even gave a reaction. Gave a reaction.
Yes.
Okay. And then how many people would look to re-enter right here? Now
Yeah.
see, they're just creating liquidity and then they'll just take them out. That's what they do all day, every day. Okay, they'll create liquidity and then take that out. They'll induce and then they'll take them out. They'll induce and then they'll take it out. That's what they do all day. Okay, and this thing, the inducement thing, it even happens on the 1 minute, and not only on the 1 minute. It even happens on a 15-second time frame. Okay, now
Okay.
you see, but even to use the 15-second time frame, you need to know where the higher time frame is heading. Okay,
Okay. Okay.
now you see that, price went higher, but what was our real target? This, right? The external range liquidity. So
Yes.
now, even
But
though this, yeah, what's
but
it?
still, if we are marking the current structure, we will
Okay,
mark
yeah,
it as like this, right? Like this, and
I can see your annotations.
you cannot see my annotation.
No, okay, now it's clear. Yeah,
Yeah.
that's how we would mark it. But
So like,
I
yeah,
told you.
you told me about
Where
daily.
did the real price swing came into the market? Where is the real price swing? Okay, zoom out a little bit and then see and then look at it. Where are the real price swings? Okay, price went like this: higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. You see it? Zoom it
Yeah.
out a little bit and then see where the real momentum came into the market. You see, these lows, like, once you look at it, once you look at it, um that's those lows are not trustable.
Yeah.
And then, okay, now price broke structure right here. Okay, it
Okay.
broke structure right here, and then broke structure, went back higher, and then came back down, broke this structure once again. Okay, and
Okay.
then price went higher, came back down lower. Okay, now
Yes.
what is our range on the 4 hour? From this high right here to
Yeah.
this low down here.
Yes.
Okay? Okay,
Okay.
awesome. I hope you understand what I told you so far.
Yes. Like I have some problems with the inducement, but maybe if we see some examples, I will
Yeah,
get it.
I'll show you
Yeah.
the examples. I'll show you the examples, then you'll understand.
Yeah.
And that's why I told you, you need to know market structure very well.
Yeah.
Okay, or else it's very hard. Okay. Now, we know that price has to pull back after this low has been taken out. We know that, right?
Yes.
You know, price has to what do we call, price has to pull back after this low has been taken out.
Yes.
Okay, and then I told you, why does price come back inside of a range? To take out internal range liquidity.
Yes.
Okay, and I
Yes.
told you even imbalances and order blocks will act as internal range liquidity. Okay, and right
Okay.
here and right here, they still have their positions unmitigated, right? Because that's
Yes.
why we have a huge imbalance right here. Okay, and then like I told you, this was a real POI, 50% of the week. Okay,
Yes.
okay, and then price went higher. Now we know that after this low has been taken out, we need to pull back. Okay, we need to
Yes.
pull back.
Because there is a lot of liquidity sitting below it.
Yeah, there's a lot of
Yeah.
liquidity sitting below it. Now we need to pull
Yes.
back, because if price
Yes.
continues going down lower, the people who place sell stops below this would be in
Will be in
profit.
profit. Yeah.
Yeah. And now, where will the pullback go into? Okay. Now, this was
Into the
our
premium
range.
of this
From
4 hour
this
leg.
high, yeah, awesome. From this high to this low
Yes.
was our range. Okay. Now,
Yes.
people would have looked at this, right? People would
Yeah.
have looked at this.
And they will
Why did
keep.
it come there? Why did it come there? Why?
Yeah.
Why? The reason was, this is what we call a climax reversal. Okay, a climax reversal. Have you heard of it before?
No. Never.
No. Okay. Okay. What a climax reversal is it takes out liquidity. Okay, a climax reversal usually happens due to news. Okay, it takes out liquidity
Hmm.
and then it will drop down heavily. Okay, by heavily I mean, now look at this. Look at
Yeah.
how many pips this imbalance is. Look at that. That was a 80 pip imbalance. Okay.
Yes.
Now that
Yeah.
is a climax reversal. You see that? Price took out liquidity from all of these highs and then boom, it came back down heavily. It tanked back down. See, it was just melting. You see that?
Yes.
Now
Yes.
that is a climax reversal. And now, why wouldn't price go up here? Now I'm sure now, once price was starting to pull back right here, people were looking at this and only this. Because why? There was a huge imbalance. People were looking at this. I think you
Yes.
can relate.
Yes. Yes. No, I was not looking at looking to trade here. Like I
Okay.
also followed the premium and discount concept.
This
So I knew
okay.
that as soon as we came into premium, I
Into
started looking
premium,
for sales. Yeah.
that's good. That's good. Because if we do this, anything above this would be a premium price. And then now, do you know the reason why price did not come back here? Why didn't it come back and fill this imbalance? Okay.
No.
The reason is, where is the inducement? Where is the inducement? Okay. There needs
Yes.
to be liquidity, because
But
liquidity is what drives the market. Yeah, what do you
can't
say?
this order block act as an inducement because a lot of
That will
uh,
act as inducement. Okay. Yes, that will act as inducement. But
yeah, but
I'll tell you.
yeah,
I'll
I
tell you.
understood what
Okay.
because the range is very big, so the people who
Yeah.
place their trades here
See,
will be
now
in
you know
profit.
it.
Yeah, I
Awesome.
understood.
Okay. Now, there is no liquidity, because now liquidity is what drives the market. You know that, right?
Yes.
Now, if there's now, imagine price did this thing right here. It came back down, and imagine price did this,
Yeah.
and then it went back down. Now we have a reason for higher
Yes.
prices, right?
Yes.
Because we have a lot of liquidity resting above these highs. Now price
Yes.
would come into this, and then it might come. Now you see, there is no inducement.
Yes. Yeah,
Okay.
like the thing which you told me now, like the pip difference. This thing is very important. No one tells this.
Yeah, no one tells you that. That's the thing.
Yeah.
And the climax reversals and stuff. So once the climax reversal happens, you can barely see a return back to the origin because there is no inducement. And now
Yes.
even this order block is pure liquidity because why? Now imagine how many people are looking at this thing. I think. Now
Yes.
imagine how many people are looking at this.
Yes.
Now, do you think it would work? No, right?
No, definitely
It
yes.
won't. No, because there's a lot of stop losses above this.
Yes.
So, so what I would do is I'll look at this week, not that high, this week.
Yeah.
Do what the rest is not doing. That's the trick. That's the trick.
But
That's
it
what the
is
market makers do.
like,
What
but
is it?
for a newbie, it is very difficult to take such trades like at this
Yeah,
age,
it's very
at the end.
difficult.
Yeah.
Yeah. Now, even for you, like now I told you all of this, but that's not enough. You need to do a lot of back testing. You
Yes.
need to practice like crazy. Now, this is a different perspective, right? I'm sure nobody taught
Yes.
you this
Yeah.
because this even order blocks act as liquidity because I didn't learn it from anywhere else. From this, I learned this from my own back testing. Okay, the clear order blocks never work unless there is an inducement. Okay, there
Yes.
always needs to be an inducement because that inducement thing, like yeah, that's a new thing. That's really a new thing. Well, that is what happens all the time. Okay, if there is inducement, it's high probable. Okay, now you see
Yeah.
why did now I told you that's a little tip I'm giving you. Do not trust clear order blocks because many people would view this now. Many people would view that as their point of interest, right? So which
Yes.
means there'll be a lot of liquidity resting above or below it. Okay,
Yes.
and then I told you that, and now I'm asking you, why did this order block play though? Okay, why
Because
did this
there is
order block play?
inducement below it.
Yeah, exactly.
Yeah.
It
This
got
is this
induced
sector. Yeah.
equal
But you
highs.
can we can see a reaction from this order block also because there
Yeah,
is an
I
inducement right
will
below
give
it
you.
in the lower time frame.
See, you know that. You know it. Awesome. Now you see, we have an inducement. That's
Yes.
why this played out because of
Yes.
the inducement. Okay. And now if we go back down to the 15 minute or the 1 hour, but wait, once we go to the 1 minute, things get crazy. So just hold on. Okay. I'll
Yeah.
show you everything. Now, price was going in an uptrend. Okay. I
Yes.
told you price is fractal. Price is fractal. Okay. It took out these lows right here. Took out this low. This
Yes.
was a major trap. Okay. It took
Yes.
out that. It took out that low, and then I'll tell you. Do you know why pullbacks happen? I gave you the reason.
Yeah.
This was the reason.
To mitigate the orders, their previous
Yeah, mitigate,
orders. Internal
and then
liquidity.
yeah, a pullback happens. A pullback happens once a major high or low has been taken out. A major one. Okay, a major high
Okay.
or low has to be taken out in order for us to expect a pullback. Okay, a major high or low has to be taken out. Okay, now
Okay.
there are dumb traders. Okay, now that's why we call them the smart money and us the dumb money. Okay, because we do not know how to utilize our money in this market, so we become dumb, right? So now there are people who does this. Okay, there are people who does this. They will they'll only look at the lower time frames. Okay, now even the 1 hour is a lower time frame. They'll see this lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and then now imagine how many people would have waited for this to happen. Lower highs, lower lows. How many people would have waited
Yeah.
for
Even
that
I
to
was
happen?
waiting for that to happen.
That's it. But
Yeah.
now I know price has to pull back. The reason is
Yes. Because
this
this low has
major.
been taken. Yeah.
Yeah, now I know. Now I know that, right? And then
Yes.
you see how many people would have looked at this thing right here. Okay. Now even
Yes.
smart money traders would do this. They would do this thing right here. Okay. They'll do that.
Yes.
And then, like I told you, the breakout traders, so the traders who trade with the trend. Okay, the traders who trade only on the lower time frame would view all of these highs as strong highs, right? Because that's a lower high, that's a lower high, that's a lower high, that's a lower high, right?
Yes.
Because now price was retracing back down in a bearish market, right?
Yes.
Because always remember, accumulation comes in a bearish counter trend and distribution comes in a bullish counter trend. I hope you know Wyckoff.
No,
No.
not clearly,
Okay,
but
okay.
I know about it.
Yeah.
Yeah, but
So
not
about
clearly.
Wyckoff, now people would think the schematics. Have you seen the schematics? They'll do all
Yes,
of
I have
this
seen the
Fibonacci
schematics.
supply, buying
Yes.
climax, and all. No, no, no. That's not what's important about Wyckoff. Okay. What's important about Wyckoff is his laws, the three laws of Wyckoff. The first law being the law of supply
Supply and
and
demand.
demand.
Yeah.
Yeah. The second one, the cause and effect. The third
Yeah.
one, is the effort and result. Okay. So
Yeah.
what he saw about the market is that he thought supply and demand is what runs the market. But no, now we know that supply and demand is not what runs the market. It's an algorithm. Okay, there's an algorithm. That algorithm is what runs the market. But yeah, supply and demand works too. That's all right. Okay. And then the second one is cause and effect. The cause being liquidity, and then the effect being the manipulation. Okay.
Yes. Yeah.
Yeah, and then the effort and result. So to see effort and result, you need to use the volume indicator. Okay, because that's the only way you can see the law of cause and the law of effort and result. Because the effort means you can view the effort through the size of the volume
Volume.
bar. Yeah,
Mm.
and then the result is the candlestick. Because the price action, the candlesticks only tell you 50% of the story. Okay, the rest, the next 50% will be shown by the volume bars.
So
All
do you
right.
use them?
Nah, I don't use it because I don't have to. Because if you know inducement, that's it. You don't need to know anything else.
Okay.
Okay.
Yeah.
Then now I'll tell you. Let's get back into this. So now people would see this as a downtrend, right? Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So now people would be wait
Yes.
for this. They'll wait for this. So
Yes.
now which that this will become an inducement, right? Now
Yes.
this is an inducement. And then, like I told you, on a lower time frame, people would see this as a downtrend. And then I told you, above every swing high, there will be
There's
buy stops. There will be buy
yes.
stops, right? Now you see
Yes.
how this liquidity has been fed into this POI. Now liquidity has been fed into this order block. That is what
Yes.
makes it strong.
Yes.
Okay, that is what makes it strong. Okay, now we
Yes.
know that I told you after a major high or low has been taken out, there needs to be a pullback, right? Now
Yes.
this was a major high because even the smart money traders got trapped here because they looked at this as an order block because you and it I think it even gave a reaction. No, it did not. Okay, now you see price came
Yeah.
back into this POI. Price came back into this POI. And now we know because now these highs have been taken out. If price
Yes.
keeps going higher, the people who placed buy stops here would be in profit. I told
Yes.
that to you. Okay.
Yes.
Now we know that price needs to pull back. And then
Yes.
we need to focus on all of these tiny, tiny little details. Okay. We
Yes.
have this break of structure on the 1 hour. Okay.
Yes.
But on the 4 hour, this was our range from this high to this low.
Yes.
This was our range. So now, well, are we interested in selling? No, because why? We are in a discounted price. Always remember that. Okay,
Yes.
always remember that. And now, once a break of structure happens, I told you, once a break of structure happens, okay, a new
Yes.
trading range will be created. Now, what is our new trading range on the 1 hour? Okay, so that's why we need to be a dynamic trader.
Yeah.
Okay, we need
From
to switch time frames. Okay,
yeah.
now this is our new range from this low
Yes.
to this high. And then I told you, once a new range has been created, there will be a trap within every range, which means that is the
Yes.
internal range liquidity.
Yeah.
Now,
This.
you see that clear order block right here?
Yes.
How many people would have looked at that?
Yeah.
Okay.
A lot.
So now,
Even me.
yeah, even you. Now,
Yeah.
now, based on the information I gave you right now,
Yeah.
would you look at this as an order block? No, right?
No.
Because you know
Definitely
this
not.
low
Yeah.
will be taken out for sure.
Yeah, I
because
will
now,
look at this week or something.
yeah, now I told you always choose the order block
Yeah, which is
that's
closest.
closest to the inducement. Now this is
Yes.
the inducement. This is the
Yes.
inducement. And then what is the closest month? The
Yeah, this
50%
week.
of this week. You see that?
Yes. Yeah.
Okay. And then price came back down, took out all of the liquidity from this. And now do they have
Yes.
any reason to go back down lower?
No.
No, right?
Yeah.
If they do that, the people who place the sell stop below this would be in profit.
Yeah. And
Okay.
they will move
So
their
now,
stop losses to be.
yeah, to break
Yeah.
even and stuff. So they came back down, created a new range, and then where can we expect the next pullback from? So now this is ping pong. Okay, now this is ping pong. So you could have done this, you could have bought from here, but you need to know the higher time frame perspective. Okay,
Yes.
we know that we're gonna expect pullback from here. So what we do is we buy from here. I did that. I bought from here, and then I know where my next pullback zone is.
Yeah.
I know that
You
once
post
this
you
high,
posted a case study about this, right?
yeah, I posted a case study. So now I even bought from here. I think. Okay, and then now we have this inducement. So I told you, after a major high or low has been taken out, there needs to be a pullback. And I even told you the reasons why. Okay.
Yes.
Now, once this high has been taken out, where will price go into? Where is the closest order block to the inducement? This, right? Only this, because you see, this was pure price action, nothing. Inefficient price action. Okay, price went back up and then came back down because they are seeking liquidity and then they'll destroy it. Okay, now where's the
Yes.
liquidity? Right here, they'll take that out. And now where's the next amount of liquidity at? Below this low, they came back down into it. Okay,
Yes.
and
Yes.
now where is the next pullback zone? Now we know that price has to go back higher into a premium price on a 4-hour time frame.
Yes.
Okay, okay,
Yes.
and then until we go into a 4-hour a premium array, okay, price needs to
Yes.
go in a bullish market structure, right? In a
Yes.
bullish market. So now, no. So in a bullish market structure, so price will do this and then it will come back down, right?
Yes.
So now, where will this higher high form? So if you know that, you can do ping pong all day long. Where will this form? Where
Yeah.
will this form? Once a major high or low has been taken out. Okay,
Yes.
once
Yes.
a major high or low has been taken out. Now right here we have these highs. We have these highs. Okay, we have these
Yes.
highs. And then you see price just wicked it. Is it? Oh, wicked it.
Yes.
Okay. And then now do they have any reason to keep going higher? No. So now the thing is the order block was not clear, right? The POI was not clear. Where did this mitigate into? It was not clear. Okay. So
Yes.
what we do is as soon as this high has been taken out, I go to 1 minute and then I'll sell it from there. I'll wait for breakout structure and I'll sell. That's what I would do. Okay.
So like
And then
you will not wait for it to return to the POI in the 1 minute.
no, I'll tell you how to trade before a breakout structure. That's a
Okay.
very advanced concept. Okay. I'll tell you how to trade without a breakout structure. Okay.
Okay. Yeah.
Based on based on one single candle. Okay. Based on one single candle. That's how we do it. Okay. So now you see price went back up, took up both of these highs, and then boom, came back down. And then now we did not refine this POI, right? So let's refine it. Let's now refine it. See, even for refinement, I go to 4 hour. I don't go for lower time frame. Okay.
Yeah.
now, now, even though this was a stop hunt on a lower time frame, on the 15 minute, this was a stop hunt. I showed that you know. But
Yes.
you see, on the higher time frame, that's why I told you, be a dynamic trader. Always switch time frames. On the 4 hour, this would be seen as equal highs, right?
Yes.
This would be seen as equal highs. Okay. Okay. Now that's not the thing. We need to refine it. Okay. Now, how will you refine it? I told you about the wicks. Boom.
Yes.
That's it. That's it. That's refined. Okay.
Yeah. But
Yeah. What's
we
up?
look at the POI, which is the closest, right?
Yeah. We. I'll tell you. I'll tell you. I'll tell you. Okay. Don't worry.
Okay.
I'll tell you.
Yeah.
Now, let's go back down to a 50 minute. Once we go back down to the 15 minute, okay, this is what price did. Okay, now price went back higher, came back down lower. Okay, and then
Okay.
once
Yeah.
again it went back higher. Okay, it
Yes.
went back higher, and this was inside of the 4 hour, the
POI.
unrefined POI. Okay,
Yes.
now if this high was to trust, okay, if this high was to trust, it should have done this. It has to
Yes.
break
It should
this
have
trust.
broken them. Yes.
Yeah, but did it break? No.
No.
Did it break? No. So now on the 15 minute, we have this range right here. You see how price is fractal, and this is how we use the fractal nature of the market. Okay, from
Yes.
this low to this high, we have a new range. So now
Yes.
price would come back inside of a discounted price. Now we know anything below this would be a discount price.
Yes.
Okay, and then you see it came back down. Now where is the external range liquidity? Right
Above
here.
this high. Yes.
Okay, above this, which means now the people who trade with the trend, they will place their buy stop above this. Okay,
Yes.
they place their buy stop above this. So now you see what the market did, what the banks or anyone who controls the market, this is what they did. Okay,
Yes.
they took out that high and then boom, came back down. Because why? Buy stops were resting, and if they keep
Yes.
continuing, yeah, if they continue going higher, okay, the people who placed buy stops here would be in profit. So do they
Yes.
want us to make profit? No, obviously no. So they pulled back down. They pulled back down, and then and now you see this. You see these highs right here. Now on a lower
Yes.
time frame, this would be viewed as a resistance, right? Because
Yes.
this is 1, 2, 3, 4, 5. This is six 15-minute candles.
Yeah. One and a
Okay,
half hour. Yes.
yeah, 1.5 hour, which means now, so NZ would have taught you this. BFIs are stacking orders.
Yes.
Because why? There's a lot of highs in the same place. And even the
Yes.
support and resistance traders, they wouldn't just do a line like this. They would mark this whole area as a resistance, right?
Yes.
Now, what makes this POI high probable? What makes it high probable? The inducement below this. You see that? The inducement.
Yes.
The inducement is what makes it high probable. And the next thing we know is that price has no reason to go above this, because on the 4 hour time frame, this was just pure, like it was just a huge imbalance, right? There's nothing
Yes.
clear on the 4 hour. So now we know price has no reason to go above this, right? Price has no reason to go above this on the 4 hour.
Could
So you
this?
may you see all of these weeks, but we
Yes.
need to know about the higher time frame, because on the 4 hour it was
Yes.
just nothing, nothing. So why would
Yes.
price react off here? Why would it react
Yes.
off here? There's nothing, right?
Yes.
Yeah, they'll always do something very logical. Okay, very logical. So now if you go to the 15 minute, I hope that made sense.
Yes.
Okay, now what makes this POI high probable is the inducement. You see that? This is
Yes.
the inducement. Okay, now this was a low, this was a high. Okay, and then you see what happened? Price went
Yes.
higher, took out all of this liquidity, and then mitigated right into that order block, the final order block where price could go into. Okay, and we had the
Yes.
inducement right here, and then price broke minus structure right here. Okay, broke that structure,
Yes.
broke minus structure, and then it broke even this low right here. Okay, which
Yes.
means now we have the bearish intent. Now we know that price has switched into a bearish market. Okay,
Yes.
and then what did I tell you? What did I tell you earlier? I told you, if price breaks structure and if it retraces and if it breaks structure once again, okay,
Yes.
now the breakout traders would view this high as a strong high. Okay,
Yes.
so I told you,
Yes.
I told you. Now you see price is very fractal. Okay, Now imagine none of that happened on the right side. We have a new range. So we broke structure. I told you, once a break of structure happens, we have a new range. So now the new range would be from this high, okay, from this high
Yes.
to this low, okay. And then I told you, within every range there will be a trap, okay. So the first thing we would do is we would mark for discount and premium prices. All right, now we know anything above this would be a premium price, okay. And
Yes.
then and now the next thing is, I told you, within every range, within every new range there will be a trap. So now, like I told you, they do not want us to make money. The same things come once again. And then if they don't want us to do that, would they give it that easily? Now you
Definitely
see that?
no. Yes.
Definitely no, right? Now imagine how
Yes.
many people now, even though it got induced right here, it got induced. You see, we have a
Yes.
lot of stack ties right here. Okay,
Yes.
it got induced. But why didn't it work out? Because this was a very clear order block. Okay, many people would have viewed this, right? Many
Yes.
people would have viewed this because you just see how clear it is. See how
Yes.
clear it is. Okay, many people would have seen this as a good order block. Okay, so now based on the information I gave you earlier, you know that this order block will not work out even though it has an inducement.
Yes.
Okay, even though it has an inducement, it will not work out because why? Many people would have viewed this, right? Many people.
Yes.
Now we have identified our trap, right? We have identified the main trap within the range. Okay, we have identified the
Yes.
main trap within the range. Now, and then I'm unfortunately I can't go back down to the 1 minute time frame. Okay, I'll just explain what happened. Now, this was now we're in the 15-minute time frame from this high to this low. Okay, now imagine what would have happened on the 1 minute. I should have come back down like this, right?
Yes.
This, okay, and then we have a inducement right here. We have the inducement right here. Okay, so I told you, always choose the order block that's closest to the inducement. Okay, and then on the 1 minute, okay, on the 1 minute, there was an order block. I took this cell, okay, there was an order block right here. Okay, this order block was the reason for this break of structure. You see, now on the 1 minute, this would have happened, right? Now you will hesitate right now. Which one would be my right order block on the 1 minute? Is it this? Is it this? Or is it this? Okay, you would have
Yes.
hesitated, right? And
Yes.
now we even have a inducement right here. Okay, we even
Yes.
have a inducement right here. And then on the 1 minute, you can see now you see this major break of structure. Okay, that's a major break of structure. Okay, this is what would have happened on the 1 minute time frame, right? I'm talking
Yes.
about this price action on the 1 minute. And then I told you this was the major break of structure. This, this.
Yes.
Okay, okay.
Yes. Okay.
And then you see how price, the real, the real bearish momentum came in after this push higher. You see that?
Yes.
Because this was the order block that broke major structure. Major structure. You see that?
Yes.
This was the order. I'm sorry, I can't go back down to a 1 minute because it's not the premium. Okay. So now price went higher and then broke this major structure. This. Okay. So now which one would we choose? Now we know this is where the real moment where the bear stepped into the market. Okay.
Okay.
And then that POI was right here. And now we know that there's a lot of liquidity resting above this. Tons of liquidity resting above this. A pool of
Yes.
liquidity. Okay. And then you see how it came back high? Boom. You see that? All of the liquidity has been taken out from this high. Okay. Yo, can you
Yes.
hear me? Okay.
Yes. Yes.
Okay. And then now imagine if we were only on the 15-minute time frame. Okay, if we were only on the 15-minute time frame, we would have exceeded right here, right?
Yes.
That is the reason I told you we need to always stay on the higher time frame perspective. Okay, now if we go to the 4 hour, if we go to the 4 hour, now internal range liquidity has been taken out. So now
Yes.
where is the external range liquidity? Right
Below
here,
this low.
below this high.
Yes. Yes.
You see, that's the
Yeah.
one to that's the 1 to 99. See,
Yes.
see the risk to reward ratio?
Yes.
That's the 1 to 99. The crazy, right? That's the 1
Yes.
to 99. Because I exited, I took out my full partials at this low. Okay, full amount because I know price has to come back down. Because you all, even NJet tells that you need to always make the story behind your trade. Okay, or else you will get lost. NJet
Yes.
tells you that, right? NJet
Yes.
tells you that.
Even the
I got that from
Phantom
NJet.
does that.
Yeah, I got that from NJet. Okay, then I'm just showing you all the high probable trades. Okay, so once we go back into the lower time frames onto the 1 minute, you know what I mean. Okay,
Yeah.
now price did this, came back down. Okay, and then I told you about the climax reversal, right? I told you earlier.
Yes.
Now, wouldn't you see this as a climax reversal because it took out liquidity from this high and then boom, it broke structure heavily. It even broke this
Yes.
structure, and then now does price have any reason to, now many people would have looked at this, right? But now does it have any reason to get back into this high? No, right? There's no
No. Yes.
liquidity. There's no
Yes.
liquidity. So which means liquidity is what drives the market, and now there is no liquidity for this high to be mitigated, right?
Yes.
And then so the price came back up, and then you see without any reason it just drops from here. Now why? Why did it, like, why? What was the reason for price to turn from right here? No reason, right?
Yeah.
Nothing clear. And then so I told you market structure is very important. So now we have this high, and then this is the low we would take into consideration. Okay, because now you see there was no liquidity for price to go back into this, which means there is no internal range liquidity. So there needs to be internal range liquidity, right?
Yes.
Now, yeah, okay. Now, what they did with liquidity, okay, because now they have a reason. Now they have a reason to go higher. You see that?
Can you explain it one more
Now,
time?
once all of this, yeah, am I not clear?
Your voice was not audible
Am I
now.
clear now?
Yeah.
Okay,
No, it
now
is
am I
still
clear?
not clear. Yes, it is clear.
Uh, okay, okay. Can you hear me now?
Yes, clearly.
Okay, sure.
Yes. Can you start again with
Yeah.
the climax reversal?
Okay, okay, okay.
Yeah.
Now, I told you about the climax reversal, right? Now you see price has no reason to go back into this high because there is no liquidity. There's
Yes.
no
Yeah.
liquidity. Okay. Now, so if there's no liquidity, they have to create liquidity, right?
Yes.
They have to do an inducement. Okay. So now
Yes.
all of these highs will act as the inducement for higher prices. Now they
Yes.
have a reason to go higher. Okay. So now would you trust any of these highs? This order block pointing in this area or this area. Would you trust it? No, right?
No. Right. Yeah.
No. Okay. So then you see how price came back up, and then even though it did not go this higher, okay, it took out that high. It took
Your
out
voice
this
is
high.
still.
You see that?
Your
Okay, give me a
voice
minute.
was again stucking,
Okay, give me a minute.
and I'm not able to hear anything if you are saying something.
Okay, give me a minute now. Okay, can you hear me now?
Yes.
Okay, can you hear me?
Yes.
Okay, so now this is what price did. Okay, from this high, I'm sorry, okay, from this high to this low is a new range. Okay, okay, can you hear me now?
I can hear you. Like on the 15 minutes time frame, that will be our range.
Yeah, yeah, on the 50 minute, I'm talking about 50 minute. Okay,
Okay.
from this
Uh,
high to this low would be a new range. Okay, because
okay.
why? If we take this low, where is the internal range liquidity? There was no internal range liquidity, right? So they need to
Like,
create an
can
internal
we
range liquidity.
can we
Yeah,
not
what's it?
consider this as an as internal range liquidity, like for this
Which
order
one?
block?
Okay, we can do that. We can do that. But now to fill all of these imbalances, is there any liquidity?
No.
No, right?
Yes.
No,
No.
there is no liquidity. So why would now? Is there any reason to for price to go back higher into this? No, right?
No. No.
There's nothing in this area. You see that? So then,
Yes.
what price did was this? It went back high and then broke structure here, right
Yes.
here. Okay, it broke structure, and then this was like it came back down. Okay, it came back down right here, but you see this was not even a tick. So even on a 50-second time frame, there would have no candles would have been below this low, right?
Yes.
Because this was just only a tick. You can see that, and we on the 50-minute time frame. Okay, and then I told you where did the major break of structure happen after this. See,
Yes.
is where the major break of structure happens. So imagine this did not happen. Okay. Now price broke this structure. Price broke structure right here. Okay.
Yes.
And then where did the real momentum come from? Right here. Okay. Right here. And
Yes.
then there is even order flow present right here. You see? So it
Yes.
filled this imbalance and then mitigated this mitigated this from this wick or something, and then this mitigated this. So which means now where is the liquidity on this wick? On this wick. Okay,
Yes.
can you understand it? Okay. And now we have these highs right here. So you see, there's a lot of things you need to take into consideration, not only inducement and order flow. Many things, okay, many things, not only inducement. So you see that price took out
Yeah.
all of these highs and then dropped down heavily. You see that it came back down heavily.
Yes.
Hope it's clear. Okay. So now we have a new range. Once a break of structure happens, we have a new range. Okay. We have a new range. Can you
Yes.
understand that?
Yes.
Okay. Now a new range. So do you know about strong highs, weak highs, and strong lows and weak lows? Do you know
I
about
know,
it?
but if you can also explain it, it will
Yeah.
be better.
So now if price does this, if it if price takes out liquidity and then break the low that created the high, if it does this, so simply if it takes out liquidity and if it breaks structure, okay, this will be considered as a strong high. Okay, that's simple. If it
Okay.
takes out liquidity and breaks structure, that's a strong high, which means now there is presence of order flow. Okay, uh, which means now the BFIs are right here, so they will hold this high. Okay,
Okay.
that's a strong high. If it takes out liquidity and if it breaks structure, it's a strong high. All right.
Yes.
Okay. And then vice versa for the other one. If it takes out liquidity and if it breaks structure, it's a strong low. Okay. It's a
Yes.
strong low. Okay.
Yeah.
Now, if it takes out liquidity, but if it does not break structure, if it does this, it's a weak high. Okay. So price
Okay.
will take out that high too. So if it took out liquidity and if it does not break this low right here, this is a weak low, weak high. I'm sorry. Okay, that's simple.
Okay.
That's very simple. So is it clear? Is it clear?
Yes, it is clear.
Okay, okay. So vice versa, if it takes out liquidity and if it does not break the structure right here, this is a weak low. Down, take out that low too. Okay,
Yeah.
okay. Am I not clear again?
You are not audible clearly again.
I don't know. It's raining heavily. That's it. Can you hear me now?
Yes. Are you speaking
Sure.
something? Uh,
Can you hear me now?
uh,
Now?
yes. Yes.
Wait, wait. There's some. Give me a minute. Hello.
Yes, you are audible now.
Can you hear me now, bro?
Yes.
Okay. I'm sorry for this inconvenience. There's some problem with my connection. Okay. Can you hear me?
Yes.
Now, I told you, once a break of structure happens, a new range will be created. Okay?
Yes.
Once a break of structure happens, a new range will be created. Now, right here, we have this range from this high to this low. Okay?
Yeah.
Everything in between will be intermediate term structure, like I told you earlier. Okay?
Can you please speak again? Like your voice was again what? Like it is. Uh, what should I say?
Okay. Okay.
Yeah.
Now it'll be all right. Okay. Now it'll be all right. So now
Yeah.
we have a new range from this high to this low. Okay.
Yes.
A break of
So
structure happened, and then yeah, what's it?
again, like I have the problem is with structure only. Like this
Yeah,
should be
yeah.
our this can be our like because there is an inducement here, right?
Where? Okay, but but
Uh,
but but has it been taken out? No, right? But it
you were
came
not
back higher,
audible.
and then uh, now
You were again
can
not
you hear me
audible
now?
when you were speaking about this.
Okay, can you hear me now?
Yes.
Issue with the connection. Okay,
If you're speaking
now you
something,
can
I
hear me,
cannot hear
right?
you.
Um, now can you hear me?
Still not here. Audible.
Give me a minute. Me a minute. Okay, can you hear me now?
Yes. Yes, you're audible. I hope you are not speaking anything.
Okay. Can you hear me now? I'm fixing the connection.
Yes.
Okay. Okay, I'm sorry for that. Okay. Now, like I told you, once a break of structure happens, there will be a new range created. Okay.
Yes.
Okay. Now, So you were stuck here, right?
Yes.
So you would consider this as a low and this as a high.
Yes.
Okay, but now is internal range liquidity being taken up? No, right? We created equal low, equal highs. You see
Yes.
that? Yeah. So now we would not view this as a high. And I
Okay.
told you, if price takes out liquidity and breaks structure, it would be a strong high.
Yes.
Okay? Okay. And then I told you, once a new range has been created, now we have this high and we have this low. Okay, once a new range has been created, what do? We look for discount and premium prices like this.
Yes.
Okay. Now we know anything above this would act as would be a
Premium
premium
pricing.
price. Yeah.
Yes.
And then we have this clear order block. Now would you trust this? No, right?
No.
No, because many people would view that. So now we know our trap. We know where the internal range liquidity is. See that? This
Yes.
is our trap now. Okay, this is our trap.
Yes.
And then I told you, always choose the one closest to the end movement. And then what do we have above this? So I'm not going into the 1 minute time frame. Okay,
Yeah.
I'm just telling you. I told you about wicks. I told you about the wicks. You see that? You see this
Yeah. We
right
have
here?
a buy to sell.
Yeah, we have a buy to sell, and on the 1 minute we will have this thing right here.
Yes.
Okay,
Yes.
and then so um on the MT4 server this was mitigated.
Can you increase
Okay,
your
and even on the
audio?
okay, can you hear me now?
Yes.
Okay, okay. So now on the MT4 this was mitigated. This thing right here. Okay,
Okay.
and then what's on? So if it's mitigated, what's on the 50%? Another order block, right?
Yes.
I told you. So then we could have done this right here. But you see, one pip stop loss, that's not possible on MP4. Okay, so now we'll take this whole thing. We need to have safe stop loss. Okay,
Yeah.
and then price took out these highs. You see, everyone who sold from this high will be taken out. And then see that
Yeah.
was telling here.
But like if MT4 allowed for a one pip stop loss, we would have taken.
They do not allow it because if you make a what do you call that? The spread will open up. Okay,
Uh,
the spreads, and then
what?
um,
Like
the
you were
spread
not
will be
audible
taken up.
clearly again.
Ah, can you hear me now?
Yes.
Yeah. So now, if you risk around $500 per trade, like
Yeah.
per on one pip, okay, on a one pip stop loss, the spreads
Yes.
will widen up. The spreads will open up, and your trade will be taken out. Okay, that
Okay.
happens. So we need to always have a safe stop loss of around 1.5 pips or something. That's safe. They can't do a huge manipulation. The brokers can't do that. Okay,
Okay.
and now if we enter here, where will we exit? External range liquidity.
Yes.
That's it. You see that? That's a 1 to 17.
Yes.
That's a 1 to 17. And then on the higher time frame, this is our target. See that? So 1 to
Yes.
26. Okay. So that's how we do it. And then now
You are not audible again if you are speaking something.
I told you about this.
It is stuck
Can
like
you hear me
uh,
now?
no, not clearly.
Give me a minute. Okay. Can you hear me?
Yes.
Yeah, I'm sorry for these things, and it's just raining
Uh,
heavily.
the audio is still very low.
Now,
Still very low.
why is that? I have full connection. Just check your connection for me.
Okay, give me a minute, okay?
Okay.
I think it is working properly.
Okay. So, can you hear me now?
Yes.
I hope it's clear. I'm sorry for this shit. I don't know why it's happening. Okay.
Yeah.
Okay. Okay. So now I told you about this, right? I told you about this
Yes.
week. Okay.
Yes.
So now price tapped right into this. Okay. And I told you about strong highs and strong lows. I told you about
Yes.
them. Okay. Now if we go to the 30 minute, and I told you that every range, every time frame will have its own trading range. I told that to you. Okay. Now
Yes.
what we could see is price took out liquidity from all of these lows, and then it broke structure right here. It broke structure. Okay. Now this has to be a strong low. Why? Because it took out liquidity and then it broke structure. Okay. And on the
Okay.
weekly time frame, we were in a discounted price. Okay.
Yes. Yes.
Yeah. And then
Uh, uh,
if
uh,
price,
th-
yeah, what's it?
this is our lower high because we had internal liquidity, right?
Yeah, we had internal
So
liquidity,
that's why this
and
is
then
our. If there was if it didn't
yeah,
have
you
any
see that?
internal liquidity, then this would have been an inducement, and this would have been our real
Yeah,
high,
that
right?
would have been an inducement. Yeah,
And
that would have been a real high if there was no inducement.
yes.
Okay,
Okay. Yeah.
and then you see it broke the structure, came back up, and then broke
Yes.
structure once again, which makes this the lower high now, and
Yes.
then it tapped right into this order block and it
Yeah.
broke structure to the
Yeah.
upside.
Now I'm
Now
understanding
we have
this.
bullish intent. Yeah, awesome, awesome. Now we have bullish intent, which came
Yes.
from this order block. Okay, and now
Uh,
we broke
no, no.
structure,
Wait,
and
wait,
then
wait.
you see
When
this.
you were speaking something about
Yeah, what's
bullish
it?
intent, your voice completely went off.
Yeah. So can you hear me
Still,
now?
yes, I can hear you.
Sure. Are you
Like
sure?
there might be a problem with my connection too. Like I don't know. Like the videos are working fine.
Yeah,
YouTube
maybe
videos are
because
working fine.
I have. Yeah, that's it. Mine also works fine.
Yeah.
Can you hear me now?
Yes, I can hear you.
Am I clear? And can you see my screen clearly?
Yes, yes, I can see your screen clearly, and like, but only sometimes it happens that your voice goes down to
All of
extremely
a
low.
sudden.
Like I cannot hear anything. Like sometimes.
Okay. So you can hear me now, right?
Yes.
Yeah. So fine. Okay.
Are you speaking something right now? Because I cannot hear anything if you are speaking right
Okay. 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 Okay.
now. Do you use Google Meet?
Okay. So can you hear me now?
Yes.
Okay. Sure.
Yes. Can you continue with
Okay.
the
Okay.
bullish intent after this, like on this
Yeah.
candle?
So
Yeah.
this is what happened on the 30-minute time frame. Okay. Now
Yes.
you see external range liquidity has been taken out. Okay.
Yes.
So I
It is stuck again. It is stuck again. It is stuck again. I cannot hear anything.
Okay, can you hear me now?
Yes.
There's some problem with the connection. I don't know why.
Do you use Google Meet?
No, bro. So
Like
I
I
might
think it
have.
might
You,
work
do you have
fine.
Discord? Do you
Yes,
have
I have
Discord?
Discord. Yes.
So shall we try Discord or something? But let's see now if it happens
Okay.
once again. Let's try Discord. Okay.
Okay. We can also try Google Meet because it will be very easy to use. And
Yeah. Is that an app or something?
no, no, Google Meet is a.
No, right?
We can just use a website.
Ah, okay, okay. So if this happens once again, let's try Google Meet. Okay.
Yes.
Okay. So now we have this happen. Price came back down, lower lows,
Yes.
lower highs, lower lows, lower highs, lower lows, and then
Like,
a break of structure. Yeah, what is it?
won't this be used as an inducement because there was no
Which one?
this
No, but the thing is, okay, but the thing is, price has to retrace back in, like after this break of structure happens, okay,
yes,
a major high or low has to be taken out for a pullback.
yes,
Now this
yes,
is not a major high. This is not a major high because you see, it was like an intermediate term structure, right? Within all of this. So, but can you see this thing right here? So, like once you see this, you'll know this is a major structure because why? There was this clear order block right here. See that? You see that?
yes,
There was a
yes,
clear order block. But what was there right here? Nothing, right? Nothing.
yes,
And no one and not any smart money trader would do this. No one would sell from this thing right here because that's too big. Now the what we call it, the most important thing for a smart money trader would be their RR, right? The risk to reward.
yes,
So would they do this? Would they take a stop loss of this? No, right? So they wouldn't do that. So that's why I told you, you need to take into consideration like a lot of stuff, all the tiny details. Now this is a major high. Okay, this is a major high. Okay,
okay,
I hope I'm clear. And then you see, price went high, and then it took out this high right here, and then now what do we know? We need to expect a pullback. Okay,
yes, yes,
now once this break of structure happens, and then you see price did this high highs, high lows. We did this. Okay, we did this, and then we broke structure right here. Okay,
yes.
okay, and then I do. Can you remove this annotation for a while?
Uh,
Okay, okay. So I told you this.
yes,
If price breaks structure, and if it retraces, and if it breaks structure once again, okay, how would the
yes,
breakout traders view this as? A strong low. A strong low.
yes,
That's how they've been taught. So now
yes,
that's the only inducement I can see right now within this range. Now, this is a new range from this low to this high. Okay. Now, if I
yes.
mark out the discount and premium prices, I know that anything below this would be my POI or my order block. So I have so this big criteria and this. So now,
So,
then, yeah, what's it?
can't this be used as an inducement?
Which one? No,
Yeah.
but where could it come into? Where could it come into? Where
Hmm?
could it come into? And I don't think it was
Yeah.
in a discounted price. No, right? You see, on
But
the
still, it can be
discounted price,
used as an inducement, right?
yeah, it can be used as an inducement. And after these lows were taken out, there was a reaction on the 1 minute. Okay, there was a good reaction on the 1 minute time frame because now remember we are on the 30-minute time frame.
Hmm.
Okay, okay,
Yes.
and then from this low to this high was our new range. Okay, and then price broke structure right here. Broke structure. I took a sale from up here and then I posted a case study about this. Okay, I'm sure you would have seen that. Okay, and then it
Okay.
broke structure, and then I told you what is the inducement now. This right here. Okay.
Yes.
Okay. And then I told you always I always use the POI.
Are you speaking something? Because it is, I cannot hear you. If you are speaking something now.
Can you hear me now?
Yes.
Now
Uh, your audio is low.
audio is low. So now?
Now it is clear.
Okay, okay. So I told you I would always choose the POI that has
Which
been
is
induced.
closest. Yes.
Yeah, it has been induced. Now, you see that?
Yes.
Okay, see that? Now, even though this low has been taken out, okay, price was retracing back down in a bearish market structure like this.
Yes.
Lower lows, lower highs, lower lows, lower highs. And this low was taken out. But did it really feel the imbalance? No, right? It came here
No. Yes.
and then it went back high. Now, if it did this, we would have taken this low as a good low, a strong low, because it
Yes.
took out liquidity from these lows and it broke structure. But now it did not. So now this will act as inducement, okay? Because now there
Yes.
is liquidity resting below it.
Yes.
Now you see, price took out that low, went higher, broke minor structure. Now I'll go to the 1 minute and show that to you, okay? Don't worry. Now I'll go to the 15 minute. I'll go to the 15 minute, and I told you, right? ICT is the person who teaches the best stuff. Okay, not useless stuff. He's the one who teaches the real stuff.
No, no,
Okay.
he does not teach. I didn't say that he teaches user stuff. Like his teaching method is not good.
Yeah, he's a I
He
see.
talks about a lot of things which are not related to this,
Yeah,
to the
not related.
concepts.
Yeah, that's right. But he gives the best. Now, can you tell me what this reacted of? How did this form? Not phantom, not tangent. Nobody would teach that. That is
Yeah,
a
this
reclaimed block. No. Yeah,
breaker
that
block.
was the inducement. No. This is what we call a reclaimed block. Okay, I'm not going to teach you that because that's not like it's not very useful because order blocks and the breaker blocks are what plays most of the time. But this, okay, but this is a reclaimed block. Okay, I'll just tell that
Okay.
you. I'll just explain it to you later. Okay, or else I'll
Okay.
send you uh, what do we call? I'll send you the video about reclaimed block so that you'll understand. Okay,
Okay.
this is a reclaim block for now. So now what price did was this, came back down, took out all of these highs,
Yes.
retraced back into the reclaimed block, and then came back down once again. Okay,
Yeah.
now we have a new range from this high to this low. So I told you, once a new range has been created, we look for discount and premium prices like this.
Yes.
Okay, and now we know that anything above this would be a premium price. Okay,
Yes.
now I told you once a new range has been created, the main thing we need to do is identify the trap. Now imagine
Yes.
how many people would have looked at this order block. Okay, how many
Yes.
people would have looked at that order block? And the next thing I told you is once the climax reversal happens, okay, now people would have waited for this, right? They would have waited for
Yes.
this order block to play out. But
Yeah.
why didn't it come back into this? There was no inducement. There was no
Yes.
inducement. There was no liquidity to for price to come back into this high.
Yeah. And the
Okay.
price does not
Now,
move this much many pips.
yeah, this much. Yeah, exactly. You got the point now. Now, this is the order block most of the people would have looked at, right?
Yes.
Okay. Many people would have looked at this thing. But now, okay, the, the reason for me to not look at this as a high probable order block is that there is no inducement. Okay, there is no inducement.
Like
People,
this.
yeah, what is it?
Yeah.
Yeah, this thing, this order block right here.
Yes.
Okay, now people would have looked at this. So I told you, do what the rest is not doing. Okay, now, now the fun begins. Okay, now the fun begins. I told you, we must identify the trap. So now we know that there is a pool of liquidity resting above this high because why? Smart money traders place their stop losses above this. Okay, Can you hear me?
Yes.
Suppose.
Yes. Yes.
Okay, can you hear me? Can you hear me?
Yes. Yeah.
Okay.
Adam,
Now,
my mic was off, so and I forgot
okay.
to turn it on.
Okay. Now I'm going to the 1 minute. Okay. Now the fun begins. Right.
Yeah.
That's my favorite time frame. Okay, the 1 minute. Okay. Now we have this order block right here.
Yes.
Okay, we have this. Now most of the smart money traders would have looked at this order block, right? Because why? It's in a premium price.
Yes.
Okay. Now I
Yes.
told you we do not trust clear order blocks because why? Now if you can see this order block, then so
Yeah.
can the
Everyone
others,
can
right?
see it. Yes.
Yeah. Now I'm going back to 1 minute. Now the fun begins. Okay. I hope I can go that far. Yeah, yeah.
Now, even
Okay.
though people might not trade order blocks and stuff, but they still know
Yeah.
about them.
Yeah, yeah, yeah. They still know about them. Okay. Okay. And now I told you
Yeah.
this is that 15-minute order block. Okay. This is that
Yes.
15-minute order block. So now if this move was a real genuine move, okay, they would have
Yes.
come back higher and then filled this little imbalance, right? They would
Yes.
have done that. But why? Why didn't they do that? I told you, we always choose the POI that's closest to the inducement. Okay.
Yes.
Now they
Yes.
cannot go higher. They cannot go higher. So now, if this was a genuine move, they could have come back higher and then filled this imbalance, right? But why
Yes.
didn't they do that? They will create a ton of liquidity above this high and then they'll take out all of those highs and then tap into this imbalance. That is their intention now. You see how much of things the 1 minute chart shows you?
Yes.
The 1 minute chart is not noise, like actually. It's the one that has the most amount of detail. So now I told you, do what the rest is not doing. This is what we would do now. You see that?
Yes.
Because you know for sure this high will be taken out. You see that?
Yes.
You know that. Like now, based on the information I gave you, you know that it will happen for sure. Okay. Now this was our new range from this high to this low. That was our new range on the 50 minute, right?
Yes.
Okay. Now I'll even tell you about this because I was back testing it and it was crazy. Okay. Now I told you. Imagine how many people would have looked at this order block. How many people looked at that? Okay, because it was clear. It had a huge
Yes.
imbalance. Okay, how many people would
Yes.
have looked at that? Now I told you, will they play out? No. And if this was a genuine move, they could have come back higher and then filled this imbalance, right?
Yes.
They could have done that, but they did not. So now, when the other people do this, what I do is I'll do this.
Yeah.
Okay,
We will
I'll do
use
this.
this Vic
Yeah,
as
we can
our
use
POI.
that. So yeah, we can go to the 1 minute and refine it. Okay? Now let's go to a 1 minute. Let's go to a 1 minute and then where was I? Right here. Right here. Okay. Now on the
Yes.
15 minute, this was my new range from this high to this low. And then now let's refine this thing. I told you about this clear order block, right? You see? Now
Yes.
if this was a genuine move, they could have come back up right here and then filled this imbalance, right? But why did they leave it? They fed liquidity into this POI. You see that? They fed liquidity into this. Okay?
Yes. Yeah.
So now this is my POI. So the other people would have looked at that 50-minute order block right here. But what would I view? This thing right here, because I know that there's a ton of liquidity resting above this. Okay?
Yes. Yes.
Okay, so I know that this will be taken out and where will price come into? The closest POI to the inducement. So this is the
Yes.
closest one, right? Okay.
Yes.
Now the fun begins. Okay. This is the 15-minute range from this high to this low. Okay. And
Yes.
have you seen I mark something? Have you seen I mark a gray color rectangle on my chart? Okay. That is the Asian range. So have you heard of the Asian range?
Yes.
Okay. So
Yes,
now
I have
the
heard of that,
Asian
but I've
range.
never used it. Like the
Okay.
people use
Use
it
it.
as
Use it. Use
liquidity,
it.
right?
Yeah,
Asian highs and lows.
That's the guide to these intraday traders. That's what guide the intraday traders to where the most amount of liquidity is. Okay. Now for me,
Yes.
so you're from India, right?
Yes.
So for us, the Asian range starts from 2:30 a.m. and then it ends at 9:30 a.m. Okay, and 9:30 a.m. because 9:30 a.m. is when the what do you call it? That's the opening price. Okay, that's 12 a.m. New York time. 12 a.m. New York time. Okay, because I
Okay.
told you an algorithm is what runs the market. Okay,
Yes.
am I clear? Okay, an
Yes.
algorithm is what runs the market, and that algorithm operates. It basically resets at 12 a.m. New York time. Okay,
Okay.
so that's when the Asian session ends. Now, this is my Asian range. Okay, now I'll show you. I'll show you how much fun this is. Now, this is my 15-minute range from this high to this low. Okay, can you
Yes.
hear me? Okay,
Yes.
now price was retracing back in a bearish counter trend like this. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Did this. Lower lows, lower highs, lower lows, break of structure. Broke structure right here. You see that? It
Yes.
broke structure right here.
So,
Now,
yes.
yeah, what is it?
I wanted to ask if you take the continuation trades.
Yeah, I'll show you. I'll show you how you can
Okay.
take continuations, reversals, anything, anything. Okay, basically anything. Okay.
Okay.
Now even here I took a trade because why? Because why? Right here I took a trade because we had this inducement, this clear order block,
Yes. Yes.
inducement, and then on the 32nd, I saw something here, like this, on the
What is
32nd.
this?
I'm sorry,
How did you mark this block?
this thing. On the
Yes.
32nd, there was an order block right here. Okay, because I
Okay.
can't go back down that far. That was on the 32nd.
Okay.
Okay, and
Yeah.
then we had this. This was my target, and then sold from here. That's why I told you it happens all the time. Okay,
Okay.
it happens all the time.
So,
You see that? That's a 1 to 5, a quick 1 to 5.
here also
Okay.
we had inducement and like
Yeah, we had inducement, and then 50% of this order block could have paid us a lot right
yes.
here. Because why? What makes this high probable? What makes this high probable? The inducement. Okay. If
Yes.
there is no
Yeah,
inducement,
the
we do not trade.
problem comes when there are multiple inducements. Like,
Yeah, yeah.
yeah,
I'll
this
tell
can
you.
also be used as an
Which one?
inducement.
Which one? Which
This
one was
one
that?
I marked, right? Yeah, yeah.
Yeah. Why can it be marked there?
Can it
Why?
not be used like
No, no. There needs to be a clear inducement. Okay. By inducement, I mean
clear
that the
inducement?
market makers or the banks they have to force people into doing something wrong so that now the market makers know that you trade all of these supply zones, demand zones, order blocks, IFCs, whatever you want to call it. Okay, the market makers know that you do that. Okay, now the market makers know that you do that. Okay,
Okay.
they know that.
Yeah.
So what they do is they will show you exactly what you need to see. Okay, so that you
Yes.
will get induced. Okay, now you can
Yes.
backtest it. Okay, you can backtest this, and then while backtesting you will see it worked out. You will see it worked out. So once
Yeah.
you see it on the real market, on the live market, you'll think to yourself, okay, I saw this while backtesting, so this is gonna play out, and then you
Yes.
will invest your hard-earned money on that, and then
Yes.
it gets taken out. That is what happens.
Yes.
Okay,
Yes.
and then even right here, if this was a genuine move, they could have they could have failed this, right? But why did they
Yes.
leave it? Why did they leave it? They need to have a reason to do something. Okay,
Yes.
before any move in the market there needs to be a reason. Okay, now you see that the imbalance was not filled. You see that it's not filled yet. So now this will be a good POI. Okay, a good POI because why? There was inducement. And what do I mean by inducement? Okay, why was this a clear inducement? Price was retracing back down in a bearish counter trend like this.
Yes.
Okay, And then I
Yes.
told you, on a downtrend, all of the lower highs are protected, right? The lower
Yes.
highs are protected on a downtrend. So now,
Yes.
what do the breakout traders and the people who trade with the trend? What do? They will place their buy stops above all of the protected highs. That's what they
Yes.
do. Okay, that is what they do.
Yes.
And I told you, after a major break of structure happens, I'm sorry, after a major high or low has been broken, there needs to be a pullback. I told that to you. Okay,
Yes.
and now we're gonna use the fractal nature of the market. Okay, to have fun actually. Okay, now we have this POI, and then we have this trap. We
Induced.
have this trap. We have
Yes.
this inducement. Okay,
Yeah.
now price is fractal. Okay, price is fractal. So price was coming back down like this, and then it broke structure right here. First structure was broken right here, and then the second structure was broken right here.
Yes.
Okay, see that?
Yes.
And then okay, now I'll show you this. I came into the chart at around this time of the day. I came at around um I came at around okay 9:30. 9:30 was when I entered the market. Okay,
Yes. Yeah, I was talking
9:30
about
was
this
when
trade only.
yeah. I'll show
Yeah,
it to you. Okay, I'll
this
show
one.
it to you. I'll show you every single reason why. Okay,
Yes.
now what I saw was like the first thing I did was I marked all of this. I marked all of this. Okay, I marked all of this, and
Yes.
now I know where I am currently at according to the high time frame. And then I saw this happen. Okay, I saw this. You see this equal lows right here. Price took them out. You see this equal
Yes.
lows.
Yes.
Okay,
Yes.
took out those equal lows and then fill this imbalance right here. Okay,
Yes.
okay, fill that imbalance, and then this is what we could see on the lower time frame, on the circles time frame. Lower lows, lower highs, lower lows, lower highs, lower lows, break of structure. Okay, if price broke structure right here. Okay,
Yep.
okay, price broke structure right here. And then I told you, if it takes out liquidity and if it breaks structure, it's a strong low. You see that?
Yes.
And
Yes.
then price mitigated this. Okay, now there is order flow. But even though there is order flow, where is the inducement for this thing? Where is the inducement? There's no inducement, right? There's no inducement. And then price went higher and it came back
Isn't
down.
this an inducement?
Which one? No, 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 no. Yeah. That's an inducement. I'm sorry, that's an inducement. On a second time frame, people would view this as equal lows, right? Because have you heard of those traders who trade on the tick charts? It means the 1 second chart. They trade on the they trade forex on the 1 second chart. I don't know why they do that. So I told you, price is fractal. So even on the 1 second chart, they will create liquidity.
Yes.
Okay, okay. And
Yes.
then what did they do? Came back down, went back higher. Now. So have you heard of these triangle traders? Stupid ass. Okay, you see that? Now there's a triangle for me.
You are not audible again.
Oh, now can you hear me?
Yes.
Okay.
Yeah.
Now, have you heard of these people called
Yes.
triangle
Yes.
traders? You see that? Now there's a little
Yes.
triangle for me. Okay. Now you see, I told you, pay attention to the slightest details. Okay. And even NJAC teaches this. This is BFY stacking up orders. A rangy
Yes.
market, sideways price action.
Yes.
Okay, sideways price action.
Yes.
And then now ask yourself, where did the real bullish momentum came into the market? You see, this thing right here is bigger than all of the previous bullish candles, right? The single candle.
Yes.
Where did it originate from? Right here. And now, what makes it high probable? What makes it high probable? The inducement just above it. The inducement. You see that? BFY stacking up orders. You
Yes.
see that? The inducement. And then see what did? See what price did? Came right into it. Came right into it. You see that? So
Yes.
what? So this was my first buy. This was my first buy,
So
and the
if
stop
the
loss
induce,
was a, yeah. What
so
is
the
it?
more the inducement is closer to a POI, the stronger that POI is.
Yeah, the stronger the POI is. Okay, you see that?
Yeah.
Like if you get the right entry, it does not shit around your entry. You see that? It just goes. It goes. It
Yes.
like it has no reason to stay there. Okay.
Yes.
Now
Yeah.
you see, where would my target be? I told you about this thing right here. I told you once a major
Yes.
high or low has been broken, there needs to be a pullback, right?
Yes.
So now this is my first target. Boom. This is my first target. Okay, that
Yeah.
was my first sell. I'm sorry, first long position. And then you see how they induce more and more people into doing the wrong things. You see,
Yes.
even though it took out this, even though it took out the trap, did it really feel the imbalance?
No.
No, right? It did
No.
not feel the imbalance. Now this can be viewed as equal highs from this high to this high, right?
Yes.
Because this was only like a 0.1 pip because nobody would place a stop loss on 0.1 pip thing. Okay, clearly clearly this was a false move, right? This was
Yes.
clearly a false move because why? It took out the trap, but it did not feel the imbalance. Okay, okay,
Yes.
and now this is what I could see. Price is now bullish, broke the structure, went higher highs, came back down, created a higher low, and then created another higher high. Okay,
Yes. So
and
what is
then
happening is right now you are creating a higher
yeah,
after
now
you were
we
done
created a
speaking.
higher
No,
high.
no. What I'm trying
Yeah.
to say is the because of the internet connection, when you were done
Oh,
speaking, it was forming the higher.
okay, okay. I'll tell that to you once again.
Yeah.
Okay,
No, no. I
now,
understood it.
okay,
Yeah.
now
I'm just
even
telling you
though the
about the.
yeah, the trap has been taken out, the imbalance was not fully filled. Okay,
Yes.
and then now we have this. It broke structure right here, and then
Yes.
price went higher highs, higher lows, and a new higher high. Okay,
Yes.
okay.
Yes.
And I told you
So
once,
I have a question.
yeah.
So
What is it?
yeah, this won't this be considered a new high because we do have inducement here, but yeah,
Where,
the
where, where?
distance is high.
Yeah, that the distance is too much, right? The distance is
Uh,
too much. Okay. You see,
okay.
there was no inducement for this. Now I'll tell you. I told you once a break of structure happens, a new
Yes.
range will be created. Now what's our range from this low right here to this high right here? Okay. So
Okay.
now once that happens, we determine our premium and discount prices. All right. Now we know anything below this would be a good POI because why? It's in a
Yes.
discounted price. And now
Uh, are you? I hope you are not speaking anything because I
would be
cannot
something that is
hear anything.
no, right?
I could not hear
I'm sorry.
anything.
Okay. Now is it clear? Okay. Can you hear
Yes.
now? Yeah. Okay.
Yes.
So now, if they do not want us to make money, would
Like
they give it to you?
after you made the
Yeah. What is it?
premium and discount, I could not
Okay.
hear
Okay.
anything.
Okay. Now we have our premium and discount prices.
Yes.
Okay. And then we know that anything below this would be a good POI. The reason is it's in
Yes.
a
Can you
discounted price.
increase the audio?
Okay. Okay. Right now.
Yeah. Yes.
Okay. Now, and then if they do not want us to make money, would they give it to us this easily? No, right?
No. Yeah.
No. Would give me. Give me a minute. Give me a minute.
You are not there, right?
Yeah, give me a minute, bro. Give me a minute.
Yeah.
Okay, can you hear me, bro?
Yes, but your audio is low.
Okay, now.
Yes, it is very clear.
Okay, okay. Now we were right here. Why it's not loading now? You can see my screen, right?
Yes.
Yeah. Okay. Oh, the one when it is not loading. Why is that? Give me 1 second. Okay, I'll just go to the 3 minute and show it to you because it's not clear. Okay.
Okay.
Okay. Now can you see the chart?
Yes.
Okay. So there was a clear order block right here.
Yes.
I showed it to you on the 1 minute. Okay.
Yes.
And now would they give it to us that easily? No, right? They would
Yeah.
not.
Yes.
This will be an inducement, right?
Yes.
This will be an inducement. And then
Yes.
what do we have right here? Imbalance. Imbalance and a POI. You see that?
Yes.
So then I know that even though this trap has been taken out, it did not
Yes.
really feel the imbalance. So then I'm buying. I'm buying from here.
Yes.
I'm buying from here. Stop loss below this low. What would my target be? This high. Okay?
Yes. Yeah.
This high. And then now it went straight into my POI. Okay? You see that?
Yes.
Now
Yes.
I'm selling. I'm selling because why? I know that was a trap. Okay? So now I'm
Yes.
selling. And then I told you about the Asian range. The Asian range is is the guide for intraday traders. Okay, that's the guide for intraday traders to where the most amount of liquidities. You see,
Yes.
I told you this Asian highs and lows will be taken out. Okay, so now my first target would be the Asian low. Okay, the
Okay.
Asian low.
Yes.
And since price is fractal, I told you from this low we broke structure right here. Now we know that for an uptrend, price has to go up and then come back down into a discount price and then go higher. We know that, right?
Yes.
So now we know that this was our new low and now this is our new high. Now we once a breakout structure happens, I told you, we look for discount and premium prices. See that? From this
Yes.
low to this high. And then we know that anything below this would be a good point of interest for us. But we do not look at
Yes.
this because why? This was inside of the Asian range.
Yes.
Asian low. Okay. And then price came back down, took out the Asian lows. Okay, it took out the Asian lows, and I even had a buy position here. Okay, like if you on the 1 minute, I would have shown it to you. Let's try once again. I don't know why it's not loading today. I think that's it. That's
It was loading.
yeah, it was loading earlier. Now it's not. Okay, so now on on the 1 minute. Okay, now imagine this is the 1 minute. Okay,
Yes. Okay.
price went higher highs, higher lows, higher highs, higher lows, higher highs, and then it broke structure right here.
Yes.
Right here it broke structure.
Yes.
Okay, and then price came back down like this. I was monitoring price action throughout this whole day. Okay, price came
Okay.
back down like this, and then
Yes.
I saw this happen. It started creating this trend line like thing. You see that? Now people would wait for the third touch of this trend line, right? This thing right here. You see
Yes.
this? Now I told
Yes.
you, price is fractal and so is liquidity. Liquidity is fractal too. Okay.
Yes.
So now I know that these people will be taken out for sure. For sure, these people will be taken out. Because why? The next thing is time and price. Now we are inside of the London kill zone. Okay.
Okay.
I hope you have heard of it, the London kill
Yes.
zone and stuff.
Yes.
Okay. Okay.
Yes.
Now we're
Like what
inside
time
of
it
the
is? If
London
you
kill
can
zone.
tell me the specific time. Like
Yeah. For us,
London. I consider
yeah.
it
For
from
us,
11:30
our
to
time,
like.
yeah, exactly. 11:30 is where the London kill zone opens, and
Yes.
12:30 is when the London session opens, and
Yes.
from 4:30 is when the New York kill zone opens, and then 5:30 p.m. is when the New York session opens. Okay.
Okay.
Okay. So now, once this happens, you see this trend line like thing forming right here.
Yes. Yes.
Okay. I'll draw a horizontal line. Um, I'll draw a horizontal line from here because I know this low will be taken out for sure. Okay. I'll go to the left, and then there was a 1 minute order block right here. Okay. I can't show it to you. I'm sorry. There's a 1 minute order block right here. The 50%. Okay. Because the trend line came in, the trend line came and it mitigated this thing right here.
Yes.
Okay. That was the opening of the trend line. So what's on the 50%? Another order block, right? I told you.
Yes.
So then that was my entry. Because why? The liquidity was there. This was the inducement. This was the inducement. And then
Yeah.
I bought. I bought. And then stop loss below this low. Now, where was my next target? Okay, now since price broke structure like this, you see, price broke structure right
Yeah.
here.
Yes.
Okay, now we
Yes.
have a new range from this high to this low. Then we look
Yes.
for discount and premium prices. Okay, now we know that anything above this would be a good area for us to sell from because it's
Yes.
a premium price. And then on the 1 minute, there was this very clear order block right here. It was very clear right here. This you see
Okay.
this week on
Yes.
the one
Yes.
minute, this was a very clear order block, and I saw, and even on this, I'm on a lot of smart money channels. Okay, I saw
Yeah.
many people looking at this order block, so I knew this will be taken out for sure. Okay, I knew that, and then
Okay. Yeah.
this was the inducement, and then which means now for the buy, this would be my target. Okay, this
Yeah.
would be my target, and then on the 30 second, on the 30-second time frame, there was this order block right here, just above the 30-second order block. I'm sorry, on the 1 minute order block. Okay,
Okay. Okay.
and then once again I sold from here
So you
to
consider
where?
the order block
Targeting
which is
this.
closest to the inducement, even if it
Yeah,
is in a
closest
lower
to the
time frame.
inducement. Yeah, even if it's a once on the 30-second time frame, I'll still take that. Okay,
Okay. Okay.
okay, and then I'm sorry, this was my target because why? We're in a downtrend. We're in a downtrend. So in a downtrend, we always target the lower lows. Okay, we always
Yes.
target the lower lows.
Yeah.
And now I know that on this range, from this low to this high, we are in a discounted price. See that? We are in a
Yes.
discounted price. Okay. So now on the 1 minute, okay, on the 1 minute, now you see this is a very clear order block, right? This is a very clear order block, and even it even got induced. But why do I not
Yes.
trust it? Even many people would have looked at this, right?
Yes.
Many people would have looked at this. So what I do is I don't do what they do. I look for this. It was just below this thing. Okay, on the 1 minute, it was an order block right here, and then we have this inducement, right? We have this inducement. You see that?
Yes.
You need to pay attention to the tiniest. I hope you understood what I told you so far.
I understood a lot of things, but there are still confusions. Like if I
Okay,
were
let's fix
there,
that up.
I would have taken
Okay,
that order block which you mentioned.
this thing right here. This thing.
Yes, because
Yeah, yeah. But
I
you see
was.
how far down it came. Spreads would have
Yes.
taken you out for sure. Okay.
Yes.
Now I told you. I told you. So have you heard of this FU candle? Okay, NZ
Yes.
would have taught you that. Okay, so what, like, how you can like view a few candle is that it has to get engulfed. Okay, like they do not teach you this, not NZ or anyone teaches you this. Okay, can you hear me?
Yes, yes, I can hear you.
Yeah. What an FU candle basically means is that there will be a cell, and
Yes.
then the next candles. Now this is very important. Okay, this is how you trade before a break of structure. Okay, this is how you trade
Okay.
before a break of structure. Now, now imagine I'm talking about a bullish FU candle. Okay, now
Okay.
price will come back down, and
Hmm.
then the next candle has to engulf it. You see how this got engulfed? You know what an engulfing candle means, is right?
Yes, yes.
Yeah. Now you see, this candle engulfs the previous bearish candle. Okay. Now if it
Yes.
gets
So like
engulfed by
it only needs
one
to,
candle, what is it?
it only needs to engulf the body, or both the body
Ah, yeah,
and the
only
wick.
the body, only the body.
Okay.
Okay, only the body. Now say this is a candle. So now one candle, if one candle engulfs it like this, okay, if only one candle engulfs it, okay, if it was just one candle that engulfed it, now this is a very strong FU candle. Okay,
Okay.
now this is
Yeah.
a very strong FU candle. If if it does this, if two candles engulf it like this, it's still an FU candle. Okay, because it has got engulfed. Okay,
Okay.
hope it's clear. And now if there's three candles that engulf it, something like this, if there's three candles that engulf it like this, it's still an FU candle. Okay, this is still an FU candle. Okay, so now
Okay.
have you heard of this pattern? Stop hunt, breakout structure, return to origin, RTO. You have heard of it, right? That's the confirmation entry that Phantom teaches. Okay, it has to do this, and then breakout structure.
Yeah.
You enter right here. That's the confirmation entry,
Yes.
right? That's the
Yes.
confirmation entry. So have you seen that price now? Most probably it does not return to origin like that. You've
Yes.
seen that, right? It just goes.
Yes.
It just goes. It'll do something like that, and it'll go. But
Yeah.
I'm gonna tell you how to trade, how to take the trade from right here before before price comes back down. Okay, you
Okay.
can take it right here. So that is based on the FU candle. Okay, so now on the 1 minute, there was a FU candle right here that got formed. Okay, so
Okay.
I told you how. Now I told you how to determine a FU candle, right? Now I told you. So you see, something like this formed on the 1 minute time frame. It price pushed down and then went back higher,
Yes.
engulfed. Okay, so what I do is I do not wait for breakout structures. I just trade the reaction. Okay, once this get engulfed, I do this. Once it get engulfed, I'll do this. That's it. So once it
Okay.
get engulfed, okay, once it get engulfed, so the next candle will most probably come and feel that imbalance, and then boom, it goes higher. You understand that? That's how we trade
Yes.
before a break of structure. Okay, so
Okay.
on the 1 minute that happened. So what I did was I did this. So it was around here. Okay, it was around here, and then now I know that on the lower time frame, this was my range from this low to this high. Okay,
Yeah.
that
Yes. I hope you are not speaking anything right now. Are you still there?